The barbell approach. Walked in the kitchen and died. Oh, what a feeling. My soul went through the ceiling.
And on up into heaven and right. When I got down, it St. John, it happened this way. You slipped on the floor and hit your head. And all the angels say, just before you passed away, these were the very last words that you said. Please don't bury me down in the cold ground. No, I'm gonna have them cut me up and pass me all around. Throw my brain in a hurricane and the blinds will have my eyes. And just in case both of my ears if they don't mind the sound. Give my stomach to Milwaukee, his favorite outfit. Put my socks in a cedar box, just get on out of here. Venus and Milo can have my arms, look out, I've got you know. Sell my heart to the junk man and
Yeah, my love rose.
please
Oh, bury me down in that cocoa ground. Hook me up, hook me all around.
throw my brain in a hurricane and the blinds will have my eyes. And the death can take both my ears if they don't mind the sound. Give my feet to the footloose, careless, fancy free. Give my knees to the needy, don't pull that stuff on me. Hand me down my walking cane, it's a sin to tell a lie. Sit my mouth way down south and kiss my ass goodbye.
But you don't bury me down in that cocoa ground. Come up, hook me up, pass me all around. Hurricane, eye. Yeah.
We have tons of great deals that we can't wait to show you, so let's go see what we...
Oh, I love you. Let's reload this platform now. See if we got a better. Installing updates. Hope everybody had a great weekend this weekend. Yeah, I dropped my phone again. I can't believe it. Gotta go get a new phone now. Let's see if this loads up better. All right. I got me a haircut. Boeing had to pull back. I'm gonna set an alert off the 200 SMA on the 1 hour. I don't trade. I might trade it. I don't know. I just don't like trading companies that I can't stand. I really don't. But I've been burnt, you know, I see them at support and I just say, no, I ain't gonna trade this piece of crap, and then they jump. Like Target. Target did pull back, so if I'd have kept that put that I bought, I scalped it for what, 40 bucks a contract. So that would have been a good one. Pulled back that 50% again. So I did a video on SPX, if you like to go back and watch it. Not SPX, but NVIDIA. Had a dick lick on a stock Twix. Get in my face. I've been watching the video every day. So I get a punk that's probably been on there for about a month and got maybe 3 followers, or you're wrong. Started calling me names. First I was going to accept it, and then he called me a name, and I said, I'm going to report your fucking ass. Every time I do that, I get like 10, 15, 20 followers. Because they actually watch the video and understand what I'm trying to say. Every video I give a perspective of if the bears are going to attack it or if it's going to be a bullish attack. I give both scenarios on almost every video. Say, well, this is where I think it can go and this is where I think it can rise. So if it hits here, it's going to be a very strong buy no matter what. Just like this NVIDIA. See, I called this 130.12 a very hard resistance to break. Once we broke it, we've came back and tested it twice. This one right to the penny. So if we come down the third time, we might fail or we might just go ahead and break out to the upside. So I've been hearing a lot of analysts be bearish on this trade. More of the fat cats, the bigger guys, the billionaires, the millionaires, CNBC. They've been given a bear case for it for a long time now. And I've been very bullish on it. I mean, I heard 5 or 6 people last week saying that they were going to sell it and wait for the pullback. And I don't think they understand the video, or they wouldn't be saying that stuff. So I typed in, some analysts are bearish on NVIDIA, but I am bullish. The guy gets there and says, well, you're giving a false pretense. I said, no, I'm not, man. I said, I called the pullback at 140 and it went to 90, you bitch. So I ended up getting about 20 new followers on that. Every time I get some idiot on there that does that, that's when I talk about egos and rookies. There was 2 of them, so the other guy I didn't block. I said, thanks for all the new followers. I'm going to head on out of here. What I'll do is spy it real fast. Yeah, I don't appreciate stupid very well. I appreciate nice people that are open-minded. I still can't get over it, you know. I also think CNBC is very snootish. A lot different than they used to be. Probably because they're so liberal anymore. They're just I remember when they were promoting Black Lives Matter.
Look at the Washington Post, and if you lose the Washington Post as a Democrat, you got some serious problems. This is what they said about the price gouging or the price control legislation. It was really pilloried from both sides of the aisle. Even Jason Furman, I don't know if you saw some of his comments. He said it's not good policy, and it could actually do more harm than good. And
yep.
I can paint you a picture of how that would work and how it's worked in the past, where we've tried to artificially hold prices down. Competition doesn't come in. People don't, like if beef is too high, people don't move the chicken. The competitors don't come in to undercut where the beef prices are. Nothing works when you try to artificially control prices. It's just a supply and demand issue. It's a flawed idea.
So did you have a question here?
Yes. Why would you propose a flawed idea? On Squawk Box last week, sharing her thoughts on price controls. Our next guest says enacting price controls is a terrible idea. Joining us now, Trump campaign surrogate, former presidential candidate Vivek Ramaswamy.
Much better.
Got a big head start in life from those crazy Jesuits, I think, but from the salt of the earth, from Cincinnati, but from the good side of town, right? Vivek, were you on the east side?
Right.
Were you on the east side of town?
Grew up on the east side of I-75, that's right.
Yeah, that figures. I'm over in Pete Rose country, over near the west side of town, but it's good to have you on. Been a while. Good to see you.
Good to see you.
We don't know a lot about the Harris-Walz economic plan, but it's been trickling out, and it's almost to a free market person or I guess a classic conservative. It's like watching A Clockwork Orange. I'm like this, Vivek, watching what's coming out, whether it's raising the rate on corporate taxes or going up to 45%, close to on capital gains for certain individuals. It's a lot of populism, but most people that defend it say, she doesn't really mean it. It'll never happen.
Yeah, so that's the irony here, Joe. And first of all, I agree with my friends at the Washington Post who observed that if you don't want your opponent to tag you as a communist, then maybe your first policy should not be a bunch of price controls in the United States. We've seen price controls fail in every other major country that's tried it. Argentina, Venezuela, under Hugo Chavez, under Nicolas Maduro. The irony in Venezuela is that you actually saw undernourishment increase tenfold over the same period where they enacted price controls in the food industry, in the grocery industry. That's exactly what they've proposed here. And I do think that the fact that this was her signature economic unveiling says a lot about where her vision actually is. To borrow Tim Walz's expression, Joe, if I may, it is just plain weird for them to focus even on the grocery sector if they were going to implement price controls. Because this is a sector in which you look at the profit margins of Kroger or Albertsons, you're looking at 2%, 1% profit margins. I saw that interview that Elizabeth Warren did with you, and I respectfully disagree with her. She even brought up examples like Kraft Heinz or Al-Maine. The reality is their profit margins are lower today than they were in 2015 to 2016. So yes, it is a just plain weird fixation. And the reality is, look at the defense of her policies. What you hear across the board is, it's not going to pass, don't worry about it. If it's the price controls, don't worry, Congress won't pass it. If it's abolishing private health insurance or banning fracking, which she's supported before, don't worry, it just won't pass. If it is the tax on unrealized capital gains, which everybody understands is going to be a disaster, what they whisper back is, don't worry, it just won't pass. And so the irony of this is that even the left-wing intelligentsia aren't defending the merits of her actual policies. All they're arguing to the public is that the reality is they will never be enacted into law. And I think that says a lot about the actual commitments of the Harris-Walz campaign.
Both sides, I guess, doing a little bit, Vivek, and I think we're going to have Jason Furman on a little bit later. I guess people don't really believe, but even, did you see the New York Times today? I thought this was funny. I guess Vice President Harris really did grow up in Berkeley. That's where her address is. It's in Berkeley. So during the speech, it was, I grew up on the Bay. I grew up in Oakland. I grew up, east of, never, so not saying Berkeley anymore at this point. And I guess, and not saying that her father would have informed her opinions on anything, but no longer a Marxist economist. What was he? He's a post-Keynesian economist that has some Kaleckian and neo-Ricardian influences, but no longer a Marxist. So it's being, a lot of this, we're supposed to think that our original opinion is not what is actually the case, and it's worked pretty well for the past 30 days. Vivek, you got to admit.
Yeah, and look, I think the PR has worked outstandingly for them over the last 30 days. The question is whether it can last through the election. For my part, Joe, I'm never going to hold somebody's father's views against them or where they grew up against them. What I hold against Kamala Harris is her own stated policy convictions. When she ran for U.S. president just 4 years ago, said she wanted to abolish private health insurance. That means anybody who's watching this who likes their private health insurance today,
I think all those are, she's backed off on all.
Take it away.
I'm reading it. She's backed off on all of those. But how would we know? This is, and I asked Mike Allen about this, for the mainstream media to not have insisted on answering some extemporaneous questions, not from a teleprompter, this far into the candidacy is mind-boggling, and it can only be a mainstream media that's complicit in trying to help her.
Look, I think the mainstream media covered for Joe Biden's cognitive deficits for 3 years in much the same way that at least many are covering so far for Kamala Harris's policy deficits. But the reason we're having this conversation is I hope that changes. I think the American voters deserve better, whether you might agree with Donald Trump's policies or not, but at least he's given you clear policies from everything from digital assets to cryptocurrency to healthcare that he would abolish or at least repeal and replace Obamacare, to look at what tariffs he would apply in particular parts of the world, how to resolve the Russia-Ukraine conflict. You may not agree with the policies, but at least he's given them to you. And I think American voters deserve the same from Kamala Harris. The other thing I'll say, Joe, is that have Republicans been perfect on issues like price controls? No, they haven't. A lot of this came up not only under Carter, but also under Nixon. Even in recent years, you've seen some Republicans favoring price controls in different areas. So I'm not going to be some partisan hack here. But the reality is if you compare the Democrats to the Republicans, it's not even close which one is actually taking the Venezuelan-style approach to controlling the economy. And the irony is that's going to be worse for even the very people they purport to serve when those supply shortages come in, when those black markets emerge, when you have a tax on unrealized capital gains that triggers a stock market crash and an asset price crash that hurts the people at the bottom the most. So that's the reality.
That's what I started with Senator Warren about that. I go, let's talk, brass tacks about how we can help with inflation instead of, but this was on the same day that I did see a journal piece that talked about the foot soldiers of the Democratic Party are all fired up about price of the road. It just continues the same sort of anti-corporate rhetoric that we saw, greedy corporations, and we heard that again and again and again from the Biden administration. But it fires up the base. But what scares me, Vivek, and I think Ronald Reagan said it, that every generation needs to learn this new, that you end up, eating your pets if you go down the path to socialism. There's enough young people that don't know that right now, where this could actually, she could easily get elected, Vivek.
So the reality is, of course, you can easily get elected. This is going to be a tight race through the very end. But the reality is, this could be good for Americans if we're able to have that policy debate, Joe. If this election is fought on personality, I think the American public loses as a result. When Tim Walz and Kamala Harris have made it their signature campaign slogan and vision to call Donald Trump and 70+ million Americans who support him just plain weird, I think that divides us in the end, rather than offering an actual alternative policy vision. They haven't done that. I think it's up to the media to hold them accountable. If the media doesn't do it, then I think Republicans need to bring Kamala Harris's own policy prescriptions to the fore. When she ran for U.S. president, when she's proposed budgets, including a 25% tax on unrealized gains, when she has co-sponsored legislation with Bernie Sanders for Medicare for all, single-payer health care, when she has co-sponsored the Green New Deal legislation that would abolish the coal industry, that they said they would eliminate the filibuster to pass through. That's the kind of policy debate we deserve to be having. And for those who say we want to defend our democracy, part of our democracy is actually having those open policy debates that, at least so far in this race, and it's only about 30 days since she's been the presumptive nominee, but so far in those 30 days, we have not yet been having, and I, for my part, not as a Republican or Democrat, but as an American, want to see that change, because that's how voters are best served. So I challenge Kamala Harris to actually defend not just slogans like "mind your own damn business," right? You hear that from Tim Walz. My view is the government should mind its own damn business when it comes to taking gas stoves, when it comes to intervening in the grocery market for price control measurements, or taxing unrealized gains. Let's have that debate in the open, and the country's going to be better off for it.
Vivek, former President Trump said, "We will target everything from car affordability to housing affordability to insurance costs to supply chain issues to the price of prescription drugs. I will instruct my cabinet that I expect results within the first 100 days or sooner than that." What is that as an actual plan?
So one of the things that President Trump has been clear about, it's near and dear to my heart as well, is taming the regulatory state. Cut down the scope
days?
of... I believe so, actually. You want to know why? Because we have a Supreme Court in the last 2 years that has given us history-making decisions, overturning Chevron deference, and West Virginia versus EPA, which I believe is the most important Supreme Court case of our lifetime in 2022, with the major questions doctrine, basically said that if Congress did not pass this through the front door, then a regulation that deals with the major policy question is unconstitutional. That is seismic in its scope. Trump did not have that at his back in 2016 and 2017. So when you're talking about a new administration and taming the regulatory state, the Supreme Court has provided the toolkit to do it. All we need is a president and an administration that is willing to wield it. So in 100 days, frankly, I'd like to see it in less than that. Executive orders early on saying these regulations are
demand-side fiscal
unconstitutional.
policy that caused the inflation, not regulations.
Well, I think
it's
there's a range
stories.
of facts. So it's not just inflation. When you look at actually the fact that prices have gone up at a faster rate than wages have, that's really the gap that Americans are left hurting for. When it relates to inflation, let's talk about energy abundance. Drill, frack, burn coal, use nuclear energy. A lot of that is constrained through the permitting process in the Department of Interior, as you well know. That is the regulatory state. When you look at permits for refineries, permits for drilling, or even offshore drilling, which Kamala Harris has previously favored a ban on, the reality is that is the regulatory state
And yet
getting in the way.
we're at record domestic oil production. But
When
yes, you're
prices
correct.
are high, that's when you
Inclusive, as you well know, of course, inclusive of the Strategic Petroleum Reserve, which is operating at the lowest level that it possibly
Weekly
has.
production, oil field production at a
Oh, yeah.
You
Now it
produce
is in the
at
election
$80
year
a barrel,
versus the 3 years that led us here, as I know you well know. But the reality is, to your point, does the regulatory
Again, get him, man, get him. I hate
giving
this
us-
guy.
Giving us supply shortages? Absolutely.
Get him,
it does.
Vivek.
And can that be addressed? Yes, it can. And the question is the president willing?
Liberals are in denial about the war on energy.
Kamala Harris, I believe the answer is no.
What about the FTC with regard to the regulatory state? I know we can debate the merits of price controls, but does the Trump camp believe that prices are too high for American consumers? And if so, is anti-competitive and ensuring kind of anti-monopolistic behavior part of the Trump campaign's platform to bring those prices down.
So this is one of the beauties of the current Republican Party is we do have what you'd call a big tent on this issue. I'll give you my own perspective is I think empowering those three-letter agencies, including the FTC, including with vaguely defined mandates like what Kamala Harris has proposed with respect to the price gouging proposal in the grocery market.
It's gauging,
is a
honey.
mistake. I don't think giving further authority to Lena Khan to decide what does or does not count as fair competition is a particularly pro-American thing to do. Competition
Mike
is
Santelli.
generally the way to look at segments
No,
of the
it's
grocery
not.
market, which is fragmented, which is competitive. We don't need the FTC empowered with further authority. And I'm consistent in my view on that. I think that we have over-empowered three-letter agencies across the board. I think our founding fathers never envisioned it.
I never heard any nonsense in my life. So the more oil you drill, the higher the prices go. That is not that's not right. That's not. He doesn't have a clue what supply and demand means. Yeah. We had a war on oil during Obama in his last term. We're at all-time production. We're in a war. We can't depend on foreign policy. Their foreign policy of the Iranians got filthy rich because of the Bidens. 250 billion, more I think now, when they were hardly making any money off oil. So during the Trump administration, we actually had a cleaner environment. Now we got pollution everywhere. We got bombs going off, smoke going everywhere, trees being blown down, lives being lost. We made Russia rich with their over-regulations. We're being laughed at throughout the whole world because of our oil policy. That's okay. Good morning, Mustang. The real bulls with always buy after the dips. No, we won't see NVIDIA at 200 after ER. Maybe 136 and 139. Maybe 150. I've seen $175 price target long on the video. So we did do it below my support. I hope you got to watch my video. If you didn't, go back and watch it. I'm going to get out of here and I'll be back at open. Never did really take time to eat almonds. I'm getting to where I really like them. I was eating walnuts for many years. So I switched over to almonds. This morning I had a apple, 2 eggs over easy with cheese, a couple crackers.
Bye, Smith.
Coming up, a pivotal report for big tech and the overall market this week. We'll preview NVIDIA's results.
Great job,
and top
Mustang.
tech names with Gene Munster next. As we head to a break, a look at the pre-market winners in the S&P 500. We'll be right back.
I go back and watch them too. After I do one, I watch it 2 or 3 times. Because I want to embed what I said, you know. Make sure I was right. Every once in a while I miss a few things. And I wish I'd have mentioned this, but I think that was a real good one. Had one guy bash me for it. Rookies. I blocked him, reported him because he used very foul language with me. Called me a moron. Nobody can do that and get away with it. Especially if you're in my face. I'm too old to slap people around anymore. And I'm not supposed to in a way, because I'm a ex-boxer and we're not allowed to. Unless it really comes self-defense. It's a boxer's oath. All right. Let's have a good day today. I'll try not to be so hyped up. I had a good week last week. One bad trade that really shook me up, but it's just an attitude adjustment. Yeah. I usually set them up pretty straight once they realize that they made a huge mistake. Because that guy will probably get blocked. Or not blocked, but kicked out of StockTwits. I'm friends with the CEO, the owner of it.
Since the August market sell-off, yes, Nvidia will report earnings on Wednesday.
Not friends, but he knows me. He sent me a shirt and some stuff. Howard Linson. Oh yeah, that's true.
Blackwell delay last quarter. Jensen Wong said that
There's another bear.
A lot of Blackwell demand, a lot of Blackwell revenue, specifically in calendar 24, and I suspect that it's going to be modest revenue. We're talking about a 3-month.
Modest. $10 billion is modest in one order. Give me a break, you dick.
Negative. Also keep in mind the stock is up 30%.
Oh God, here comes the bear.
Weeks, just shy of 5%.
This is what we argued about. He said, there's no bears out there. I said, Bull, have you not been listening to these guys? I mean, we're in competition with the fat cats right now. The stock's actually at a reasonable price, and they don't want us to have any of it. So they're doing their best to demonize it. I don't want to listen to that guy. I'm going to get out of here so I won't have a heart attack.
Is that the market is going to be, this is the only thing that matters to the
So
AI
the dip will
trade,
be a buy.
This week. It's obviously the biggest factor in general, but of course with the earnings. And so, yes, I think that if there is a modest pullback, I think if there's anything around Blackwell, I think that could be perceived as a negative for kind of broader tech that, especially the mega caps, have enjoyed some of this AI movement here. I still think we're very early in this, but again, I want to frame in that I think that trading in the near term doesn't impact what's ultimately going to happen. And
This is my opinion of what they're trying to do. It's real cheap right now. So they're going to do their best to bring it down. They can spend a lot more money and make a lot more money if they can get it down to like 118, or some are calling for a 25% pullback on NVIDIA after earnings. I'm not. I'm very bullish on the stock. So I'm a scalper and a day trader. So every day is an opportunity to make money on it if you look at it that way. And wait for the dip and then buy it for long.
The NASDAQ 100 type stocks going into mid-year was this scarcity of earnings growth, and they obviously had these reliable growth paths ahead of them, and now it's broadened out. The rest of the market is actually clicking back toward positive earnings growth. You saw the equal-weighted S&P now outperforming.
They're going in with this
100.
broadening out shit.
It seems as if it's through no fault of their own. Maybe they're just not the preferred trade anymore. Is that something
God.
that you think it can persist, or do you essentially still see kind of a tech bubble brewing up ahead?
I think we're still very early, and just to kind of put into context, we talk a lot about the quarter, about the stock action around NVIDIA, and this gets to kind of the broader theme. I think that the most important part about the NVIDIA quarter, I just want to go back to that 1 minute because I think it's important relative to the overall conversation, is Jensen's comments about what's going to happen with demand over the next 1-2 years. 2 quarters ago, he said they have more demand than they can supply through the end of this year. Last quarter, he said well into 2025. If he continues to reiterate that the demand has continued to be more favorable, which I believe that he will do that.
Yes, he will.
If he continues to reiterate that they have more demand than supply.
They got
I
one
think that
order for $10 billion
I think
for this
awareness of the substance
Blackwell
of what's
chip.
going to happen is going to continue to be illuminated. And ultimately, I think that that these companies are going to continue to very well. Take Apple, for example. I think that ultimately they can earn $8-9 kind of in the next by 2026, and I think that that's well higher than what many think. So, Mike, I believe that this is just a fundamental. There's a lot of awareness around AI, but I think that the significance of what it's going to do is still underappreciated by the market.
Gene, we had Bradley Tusk of Tusk Ventures on Fast Money last week, and he talked about the venture market for AI and how startups with that AI bend aren't getting the pie-in-the-sky valuations that they had been getting. There's been a demonstrable slowdown and a reset of valuations. And I'm just curious how that translates to the public markets, do you think, in terms of incremental dollars still seeking AI plays and just the overall story nature of AI at this point in the cycle?
So on the public side, we're still in this hardware phase. The software phase largely still hasn't taken root. That is largely going on in the private markets. I think some of these foundational, these ordained private companies, at Deepwater, we also invest in private companies. We have a venture arm. And so we're seeing what you're talking about, but we think some of the best opportunities in software are on the private side. We'll see those companies go public in 1 or 2 years. But to answer your question is that I think that the focus of investors related to AI and the public markets should be around the duration of what this hardware trade is going to look like. And if you look at NVIDIA's growth rates, it's 100% in 24, it goes to 40%, down to 15% in calendar 26, so essentially hitting the wall. I think that they're going to exceed that, and I think you're going to see across the board. We also own like Micron, for example. So I think that this hardware trade, even though there is a deceleration factor to it, I believe that the street will exceed those estimates, and I'm looking forward separately to this crop in a couple of years of these new private companies that are going to, I think, get really that public investors will be really excited about.
Yeah, I'm looking forward to that too. I think we also get Dell earnings this week as well. Gene Munster, thanks for being here.
Thank you.
It is just before 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Jim Kerner, along with Mike Santoli and Leslie Picker. Andrew and Becky are off this morning. Among today's top stories, oil prices are rising, with traders looking at some of the conflicts in the Middle East. including the Israel-Hamas war in Gaza. Also strikes between Israel and Hezbollah over the weekend. NASA deciding that 2 astronauts will hitch a ride home on SpaceX's Dragon ship instead of the Boeing Starliner capsule that brought them to the International Space Station back in June. Safety concerns means that the Starliner will now return to Earth empty. The decision represents a black eye for Boeing, but a win for SpaceX. And IBM says it will shut down its China research and development operation. The move will impact about 1,000 jobs. Shares of IBM are basically unchanged this morning.
And futures at this hour, S&P and Dow implying to open higher, but just barely. NASDAQ implied to open down about 34 points. Treasuries, let's take a look at the Treasury complex as well. This morning, you got the 10-year above 3.8, again, just barely at this point. The 2-year 3.913%. Meantime, Fed Chair Jay Powell's speech on Friday in Jackson Hole seems to have helped restore Wall Street's faith in an economic soft landing. Mike's been taking a look at how long that faith can last. Seems like it's lasted for the better part of the year.
For the most part, it has, although you've had these kind of gut checks and bouts of doubt along the way. In fact, if you look at the S&P 500 chart for a year, that decline we saw off that peak in mid-July was that moment when we had maximum faith, I think, in the soft landing, also maximum long positioning in things like tech. We did pull back. You had some softer economic numbers along the way, and the market has been more sensitive to growth risks than to persistent inflation for a while. So I think Friday's comments by Powell essentially came back in line with the absolute preferred message that investors want to see from the Fed central banker. Take a look, though, at the NASDAQ 100 relative to the equal-weighted S&P 500. So obviously much closer than they were just a month or two ago. And that big jump in that moment where it took off in July was after the CPI report for June. So you had that very benign CPI report. That's when the market said, okay, we can kind of declare victory on inflation here if only Powell will let us, and maybe we can have the majority of stocks play some catch-up along the way. Now take a look at the City Economic Surprise Index, because it does show you that there's still a pattern here of economic numbers coming in below forecast. That's not absolute activity levels. It's a 3-year chart, but it shows below zero. It shows you on balance, the numbers are coming in weaker. That's why you have this sensitivity. So I think it makes sense that the market reacted in this positive way to what Powell had to say. The question is, once you get back to, toward peak valuations, above 21 times earnings, have you already taken credit for that? And then it leaves you susceptible to any numbers that come in that deviate from the preferred.
So given that concern and kind of knee-jerk reaction, as we saw in early August, what does that mean for the potential for a 50 basis point cut versus a 25 basis point cut from a psychological standpoint of the market, insofar as a 50 basis point cut would signify, maybe some sort of a counterpoint to that soft landing narrative?
No, exactly. I think that history says when the Fed is easing in smaller increments, more deliberately over a prolonged period of time, and not urgently in big chunks, that's actually better for stocks, because it obviously means the economy holds together. If you look at that whole playbook that says, you know what, historically you're going to hear a lot of this, it's actually paid to sell stocks on the first rate cut. It's mainly because some of those first rate cuts happened in 2000 and 2008. And in other words, they led to recessions or preceded recessions, and that meant the Fed was late. The bet here is that the Fed's not late. It's more like the mid-90s, when they only cut a couple of times, trimmed around the edges, markets never look back.
Thank you. Thanks, Mike.
You're very welcome.
You were supposed to say that.
Yeah, that's okay.
We both thank you.
We're all very thankful
only
here.
going to say it if she feels gratitude.
I know.
That's
That's how I read it. I thought it was like, well, it was okay, but I don't really think it needs a thank you. Plus, it is your job.
I didn't have a choice,
Kroger and Albertsons head to court today to defend their merger. The companies proposed what will be the largest supermarket deal in U.S. history, and it was proposed back in 2022, saying it would help them cut costs and compete better with Walmart and Costco. Take your pick, Amazon, Trader Joe's. The Federal Trade Commission has sued to block the merger, saying it would eliminate competition and actually end up being higher grocery prices. Higher grocery prices. You know who that is? Santelli.
Oh.
Not Santoli.
Santelli.
Santelli.
Don't get 'em
Confusing as
confused.
it not.
I was almost gonna, I knew it was Santelli, but you know, Phil has the Chicago accent.
He does. He does. Definitely. Batteries.
After-
Elon Musk talks about batteries a lot. Was it the Great Santelli or Great Santoli? It was the Great Santini.
Santini.
Okay.
Was the
it was
book of
neither.
the movie.
Yeah, yeah. Robert Duvall. But you're both great.
Well,
And that's why we thank you
lowercase,
after
yeah,
your
lowercase g.
And deserve thanks.
Canadians, speaking of that northern accent, Canadian rail workers are ending their work stoppage today. The country's Labor Relations Board sided with a government order directing Canadian National and Canadian Pacific Kansas City, my hometown, to resume operations and impose binding arbitration. The Teamsters Union says it will comply, but plans to appeal the ruling in court. Canadian Pacific expects the rail network and supply chains to fully recover from the stoppage over the next several weeks.
All right, more news on the struggle to sell Paramount Global. Edgar Bronfman reportedly has plans for the studio, including a partnership with a tech giant such as Amazon or Apple to improve its streaming service. Bronfman put in a last-minute bid for control of Paramount last week. Bloomberg reports Bronfman believes Paramount needs more specific skills in terms of ad sales, licensing, and growing its customer base. You see Paramount indicated higher by about 0.25%, been in this range for a while.
Coming up, an economic debate you don't want to miss. We're going to get into the emerging plans from Donald Trump and Kamala Harris, with two former chairs of the White House Council of Economic Advisors. Well, actually, people used to sit in them. Although we did have a chair talk once in that Clint Eastwood, remember that with Romney?
Did it talk or did he just talk to it?
I think he talked to the chair, you're right. But the chair looked unhappy with Kevin Hassett served under President Trump. Jason Furman served under President Obama. Stay tuned for that. Squawk Box will be right back.
Insurance.
Major averages coming off back-to-back positive weeks. So, of course, that was helped by Friday's rally on Fed Chair Powell's comments signaling rate cuts ahead. For more on the markets, we're joined by John Mackay, U.S. Head of Wealth at Schroders. John, good to see you here.
Good to see you.
Markets seem to feel as if maybe, we've kind of nailed this thing, that there isn't really a serious trade-off to be worried about at this point in terms of where rates go relative to the economy, relative to earnings, relative to stocks. Where do you fit within all of that?
I'm a little concerned. I hate to be a Debbie Downer, but I'm a little concerned about the rally we've seen over the last 3 weeks. It's almost like the market thinks the Fed knows exactly how many cuts they're going to do, and I'd be, willing to bet that Powell and the other Fed members don't know, right? The Fed is uncertain. Powell said rate cuts are coming, but he didn't elaborate on that. He didn't say we're getting 50 in September or 25, and he certainly didn't elaborate on the pace of rate cuts. And as we've seen in the past, the Fed puts out this summary of economic projections, the set, which shows the consensus view of where Fed fund rates are going. They usually get it wrong. And so I think there's a lot more certainty priced into the market than what we'll get out of the Fed in September.
Although there is a school of thought that says, without knowing or even pretending to know exactly how far or fast rates might go down, the Fed has a couple of 100 basis points of what it believes to be excess restrictiveness in their policy, and therefore the direction is that's a cushion if things perhaps don't go right with the economy.
I would agree with that, but I think, again, getting back to the market's pricing in roughly 100 bips between now and the end of the year. We've got 3 meetings, so that implies you get 1 meeting where there's 50 bips. And I think the problem is, what if we get a good labor report for August in early September? I think that throws the market's pricing off a little bit. And so again, it gets back to a little bit too much optimism probably priced in the market right now. Valuations are high heading into this cutting cycle to begin with. There's a lot of crowding in the market. And so I think you could get a little bit more volatility between now and the Fed meeting in September.
Where does that take you in terms of, wanting to, lean in your portfolios? I mean, if you think that things are crowded in terms of certain assumptions, where else would you go?
Super boring. Boring is beautiful. Look, the Fed's cutting rates because the labor market is weakening, right? Powell said as much.
Well, they would say they're cutting rates because inflation is on the way to target.
But he also said that he doesn't want to see any more deterioration in the labor market. So it's sort of shifting focus from inflation, a focus on inflation, to a focus on the labor market. So if we do get better than expected employment numbers, I think it will still allow the Fed to cut rates, but maybe not at the pace the market was expecting. And so again, getting back to areas of the market that aren't crowded, aren't overly priced, consumer staples, we all need soap, shampoo, and toothpaste. Pretty boring stuff, but those areas of the market that have done well, if you look back at when the inflation report came out in July, on July 10th, that was sort of a clear signal to the market the Fed could start cutting rates. Consumer staples, utilities, REITs have all done better than infotech, communications, and some of the more crowded areas of the market. And so I think it's just worth looking at your portfolio and saying, do I have enough, right? Do I have an umbrella in case there's more market volatility and more storms coming? Mm-hmm.
So, when Powell says it's time for policy to adjust, you don't necessarily read that as it's time in September. You think there is a possibility that, that policy adjustment could take place further in the future? And if so, what does that mean for market volatility?
So I still think we get a rate cut in September almost no matter what. You would have to get unbelievably strong labor market numbers, really good inflation numbers to the downside between now and then for the Fed to be able to credibly get up there and say, we're good, we can hold off for another meeting. What I think it does is it probably shifts the market expectations for how much rate cuts you get over the next 4 months between now and the end of the year, and how much you might get next year. The market's effectively pricing in 200 bips between now and the end of next year, and that might be too optimistic.
Although it always seems to be once you know the direction, and the Fed has signaled that very clearly, the market's always going to say, well, if we're wrong exactly, it's probably going to skew to the downside, or at least that's the direction of overshoot. So I just wonder how important that is, because we priced in 6 cuts in January that were supposed to happen this year. Didn't happen. The stock market didn't exactly have too much trouble with that.
So you're 100% correct, right? The Fed, I think, has to wait for data to come in. It's also a consensus, right? You have to follow the lead of Powell, but it's a committee, so they all have to agree. And you've gone from, I'm generalizing it, roughly half hawks, half doves, to more dovish, voters on the committee now. But I think just remember back to the hiking cycle. It was 25, 50, and then suddenly 75. And so the Fed had to catch up to the pace of inflation, and you may see something like that happening on the way down. I just think what drives me nuts is the market thinks it's figured it out. We know exactly how many cuts we're going to get between now and the end of the year, but I think we can all sit here and say no one knows for sure.
Yeah. I guess, do you feel like you have to convince your clients to hold less cash? Like, what's the line that you feel like you have to emphasize most of that?
The toughest thing is getting away from the winners, right? It's not fun to go to a cocktail party and say, hey, I bought a consumer staples company that makes your shampoo. It's super fun to go to a cocktail party and say, I bought a company that makes the leading edge chip used in artificial intelligence. So it's more about, are you still diversified? Have you let your winners run, and is it time to pare some of that back? I think cash is an interesting point, right? Flexibility and the return you're getting on cash is a good thing in this market. I just wouldn't hold too much of it, because those rates will come down fairly quickly along with the Fed. And it's just looking at areas of the market that may not have been as much fun to own over the last year, 2 years plus.
Right. Appreciate that.
Thank you all.
Coming up, breaking durable goods data that's out at 8:30 a.m. Eastern Time. But next, the latest on this weekend's violence between Israel and Hezbollah and the wider conflict in the Middle East. We'll speak with an expert. Stay tuned. You're watching Squawk Box on CNBC.
Multiple reports over the weekend saying Pavel Durov, the Russian-born founder of messaging platform Telegram, was arrested in France. French media reporting today that Durov was still being detained, though the French government hasn't officially confirmed his arrest. Telegram is widely used in Russia, Ukraine, and the republics of the former Soviet Union. Messages are encrypted, making the service popular with those seeking more privacy. Telegram has also faced scrutiny for enabling cyber criminals and extremists. Durov told the Financial Times earlier this year the service has 900 million monthly active users.
Israel and Hezbollah exchanging fire this weekend, with Israel saying warplanes targeted rocket launchers in southern Lebanon in order to stop an imminent attack by Hezbollah. Hezbollah, for its part, said it launched rockets and drones aimed at military bases in northern Israel. This is all against the backdrop of ongoing negotiations in the region aimed at trying to get a ceasefire between Hamas and Israel. And joining us now, Firas Maqsad, Senior Fellow at the Middle East Institute. And for what I'm seeing typically written is that neither side at this point really seems to want it to escalate to the point that some of us are worried about. Is that true? And what do you attribute that to?
Well, yes and no. Let me try to infuse some nuance here. Clearly, the regional players, the United States, certainly very influential, but also Iran, which is the patron of Hezbollah and Hamas and some of the other groups trying to get at Israel there. These two players do not want to see a broadening of this war. And there's a lot of back-channel diplomacy taking place. The challenge here is that the local players still have the will to fight, whether it's Israel or Hamas. It seems that, Israeli Prime Minister Bibi Netanyahu clearly is to face a day of reckoning for what happened on October 7th, the intelligence failures, once the guns fall silent, perhaps interested in continuing, maybe even broadening this war. And from day one, Hamas's Yahya Sinwar, its leader, who's hiding in the tunnels of Gaza somewhere, has tried to draw in the Iranian axis, Iran, Hezbollah, the Houthis in Yemen, on behalf of its cause. So the local players here perhaps still having a will to fight, but the regional players in the United States trying to put a lid on things.
What is the reason for Iran's restraint?
Well, Iran has always had a preference for indirect warfare, using the various militias and groups that it sponsors, arms, and trains throughout the region to try and get at Israel through 1,000 cuts, not a direct head-on war. It understands very well that in a direct war situation with Israel, it probably had a lot to lose, including its much vaunted nuclear program. So for that reason, not because of Iran being a responsible regional player, Iran prefers not to have a direct war with Israel at this point.
So Israel probably knows that. Would there be a reason for Israel to keep poking even the proxies or poking Iran to try to get them to finally say enough is enough so that they can take out the nuclear facility?
Yeah, what we would pay to be in the mind of Benjamin Netanyahu right now. There certainly is a rationale for it. Many of the analysts out there tend to focus, and I did just mention myself, the personal interest, the political interest of the Israeli Prime Minister in prolonging this war for his own well-being. But there is a strategic rationale for it too. The United States is marshaling an armada in the Mediterranean and in the Persian Gulf in defense, essentially playing defense on behalf of Israel right now. The situation on the northern border with Hezbollah, according to most Israelis, not just the prime minister, is untenable. Something has to be done about the balance of power. Iran, through Hezbollah, implanting itself there. And northern Israel has been largely vacated. 60,000 plus Israelis have already left. So if you are to redress the balance of power against Iran, starting from maybe South Lebanon, this might be an opportune time to do it if you're the Israeli prime minister.
Does that require U.S. involvement?
Very much so. I mean, all the analysis, all the intelligence, the United States itself sort of saying on background here that Israel cannot defend itself against some 150,000 rockets that it believes Hezbollah has, Hezbollah being the most powerful non-state actor in the world. And obviously there's the potential that Iran might get directly involved too on behalf of its leading client in the region. So for all these reasons, the U.S. will continue to play an essential part in the defense of Israel. Israel depends on that.
Did Israel have a heads up? I mean, it was just before it was really going to start, wasn't it, for us? And how does that happen? I guess we can figure it out in terms of intelligence, but couldn't Hezbollah have brought a lot more force if it chose to do so?
Absolutely. And here we have a war of narratives, so to speak, taking place. The Israelis would have you believe it was precisely because of their pre-dawn, preemptive attack that much of the force of what was coming from Hezbollah was blunted. This, by the way, was done with direct American assistance. We know now that American drones were active over the area and were providing real-time intelligence to the Israelis. That's how they knew, together with their own, that this is coming. Hezbollah will say something different. Hezbollah will tell you that this was very calculated, very precise. It was meant to target a specific military base north of Tel Aviv, and that they did this precisely because they don't want to drag the region and Lebanon into an all-out war. But in all cases here, this was something that was much less than was feared, and the region is collectively breathing a sigh of relief today.
Hopefully that continues for us. We appreciate your time this morning. Thanks.
Thank you.
Okay.
All right, coming up, breaking economic data. July durable goods orders are next when Squawk Box returns.
We're about just over a minute away from July durable goods, and there's where we stand right now. The Dow has continued to move slightly higher with a little upward momentum, while the NASDAQ has moved down a little bit more, down about 30. Not a whole lot happening so far with the S&P up just barely. The Treasuries this morning, let's see, 381. It's been pretty quiet as well. Just to further confuse everyone, Mike Santoli's here. Rick Santelli is standing by at the CME. In Chicago, we got some time. Rick, I bet you in 28 minutes, or 28 seconds, you could say some good stuff. So I'm not going to try and just kill the time before the numbers come out. What do you got?
Well, I think that what we really need to be concentrating on, now that the Fed's most likely going to be easing, is the great rollover. Will the economy roll over when rollover happens with regard to restocking lots of paper with higher yields? And I think that really is the next issue to pay attention to, along with the ongoing issues of seasonality affecting data. And durable good orders, preliminary July hitting the wires, Joe. Expecting up 5%, double that. We're up 9.9%. Big asterisk, though. In the rearview mirror, we had minus 6.7. As a standalone, that would have been the lowest, the biggest negative month-over-month change, which now gets revised to minus 6.9, going all the way back to the COVID-affected April of 2020. If we try to take COVID out of the equation and look what the comp would be, it would actually go back to July of 2017, where you're down 8%, just to give you a different view. Now, if you strip out transportation, the number drops rather dramatically. Minus 0.2%. That's actually very close to expectations. And in the rearview mirror, the up 0.4, which it was last month on its final read, really gets demoted to down 0.1%. Now, let's look at non-defense ex-aircraft capital good orders, a proxy for capital investment. Down 0.1%, a little light. We're expecting more of a positive or unchanged number. And in the rearview mirror, we had a powerful up 0.9. But just like the negative headline number, you have to look at it over a couple of months because it is coming down. But it's coming down with some strength. Up 0.5% is the revision. So they did slice it in half, but it was still a pretty good number. Now, if we switch from orders to shipments, deterioration here. Maybe shipments is a good area to pay attention to give you a glimpse of the future. This is down 0.4%, down 0.4. The last time we were down there would have been May when it was down 0.6. Prior to that, February it was down 0.8. So we can see that there has been an ongoing weakness in the shipment side. Last month's up 0.2, now becomes 0. So all the revisions were more negative on our final June reads. Interest rates have ticked up a little bit on that, and my guess is that interest rates are going to get much more discriminating on data points. But having said that, these data points, for the most part, are a little bit better than we were expecting. But when you take revision into account, it's a wash. So why are interest rates creeping up a bit? My guess is that we're going to spend a lot of time near unchanged on the year, around 388. We see pre-opening equities are holding their gains. And of course, the dollar has been suffering through dropping interest rates, and we continue to expect pressure there. You want to take a long view on the dollar, Joe? Just blur your eyes and look at 100. Big psychological area, big technical support. Back to you.
Great, Rick, thank you. Let's get to Steve Lee. Steve, I think Rick said big asterisks, big asterisks. I don't know, he kind of mumbled it a little bit. I don't know if you were listening and were wondering what the heck he said, but apparently there were some caveats to some of those numbers. But I misunderstood it. And you're back. You're back. Yeah, you're back in a big way. Back bigger and better than ever.
Yeah, wearing I got a tie on, which I like the other outfit without
big
the tie,
asterisks.
right? I mean, that's a better thing. But here's the thing. I think the big thing with Boeing, the negative last month, positive this month. Rick is right, and I want to explain why he's right, to point out the 0.4% decline in non-defense aircraft goods shipments. That's a part that flows into GDP, the shipments of these things, and that's going to be a negative for GDP for this for the third quarter. We've been running 2.5, somewhere in there. We have had weakness in the ISM manufacturing index. That seems to be showing up in here, Joe. I'm seeing some other negatives here when it comes to new orders for electrical. Let's see what else is negative here. New orders for and shipments for motor vehicles and parts. Defense is good. Sorry, that did well. But overall, Joe, it's a weak number when it comes to also the business investment proxy. So let's think about the context here and where the Fed is in all this. We have been looking for months and months and months, 30 months, Joe. We've been following the inflation reports on the edge of our seats. Now we're sort of like, okay, inflation is more or less under control, still some work to do there. Now we're looking at the other side of the mandate, the employment side of the mandate, which is a proxy for the growth side of the mandate as well. So I think when it comes to the sensitivity of the data, Joe, it's going to amount to watching the growth numbers, things like durable goods, things like employment. We do have an important inflation report this Friday, but to me, as it was last month, the income and spending numbers part of this inflation report will be more important to me, I think, than the actual inflation. Joe?
Steve, we were talking actually quite a bit about, as we always do, about what to expect, Fed funds, futures, etc. Do you think that if we get a big surprise, do you think it would be fewer cuts or quicker, bigger cuts? Where's the risk?
Well, it depends on which way the surprise happens. I think the Fed.
I want to know. I want to know now. I want you to tell me now which way is it, so it won't be a surprise for me.
Well, Joe, I don't want to take any of the drama out of all this, but I think the Fed wants to move gradually. I think it wants to feel its way towards whatever that neutral rate is, which it doesn't know. And that would speak to me of gradual declines in rates, maybe even a pause in there. There are members of the committee, Joe, who think we're very far from neutral, and they have a lot of work to do to get into a position to aid the economy. And there are some on the committee who want to move more slowly and who like the idea that, hey, I want to keep rates higher because they think it's ultimately healthier for the economy to have a higher rates rather than some of these low rates which have distorted, say, investment decisions over the course of the past several years. So there are members like that. And that's, what's interesting, Joe, is you ever been in a rock and roll band, Joe?
Yeah, like saying 25 or 6 to 4. That's the last thing I ever did, and laughed off the stage.
Well, the Fed is like a rock and roll band, Joe. You know why? Because we always argue about tempo. What's the right speed? So, the Fed is going to be no different. They're going to argue over speed. But the thing that I said, I think, which is important at 7 o'clock, that's a normal kind of situation. We should be arguing over speed. How fast to get there, there's uncertainty, but there's a lack right now, I think, Joe, of urgency.
I'm embarrassed to admit that, and you probably have done this. I'm embarrassed to say I had a Les Paul that I was playing, and I had a Marlboro in the strings sitting there with, like, it was in high school. I mean, I'm embarrassed to even say
all the cool kids, Joe.
I'm embarrassed to say that I couldn't even smoke this, but I thought that was so.
What you should be embarrassed about, Joe, is you probably sold that Les Paul and what it might be worth now.
I know, I did. I needed. It was one of those beautiful sunburst Les Pauls that if I was just, but I was an idiot.
I'm sure.
I was assuming it was like a karaoke.
No, I with the Marlboro, funny Marlboro. See you, Steve.
Up next, debate with two ex-chairs of the President's Council of Economic Advisors, Kevin Hassett and Jason Furman, will be our special guests, and joining us to talk about the emerging ideas from the Trump and Harris campaigns. Stay tuned. Squawk Box will be right back.
make money.
Welcome back to Squawk Box. The futures right now pretty steady. The S&P 500 holding on to last week's gains. It sits about 0.5%, a little more than that from a record high. The Dow indicated higher by 30, and the Nasdaq slightly softer, indicated lower by 45 points at this point. Joe.
When it comes to the U.S. economy, both Donald Trump and Kamala Harris have embraced ideas of government intervention, but the two presidential candidates have vastly different ideas about what that would look like in the real world. Kevin Hassett, former Council of Economics Advisors Chair under President Trump, is with us. He's a distinguished visiting fellow at the Hoover Institution. And Jason Furman, former Council of Economic Advisors Chair under President Obama. He is a professor at the Harvard Kennedy School of Government. And I really don't want to pick on either one of you about things that you have to defend from the respective candidates, but I think I'm going to do it anyway, though. I think I have to. And I'm sorry to start with you, Jason, because, and I got to give you credit, you weren't mean about it, but you kind of tried to say price controls are probably not a great idea. You said it right away. No one had to prompt you. You are, after all, trained in economics, so it wasn't that big of a leap for you to make that statement.
Yeah, so thanks for picking on me as always, Joe.
I'm going to get to Hassett. I'm going to get to Mr. Tariff, Kevin, and Mr. Never Cut Entitlements, Kevin Hassett. Go ahead.
Yeah. Look, did I like the proposal she had about price gouging? No. Do we know the details of it? We don't really know them, but some of what's trickling out suggests this might be more like the things that states do, which I think are also mistaken, but are a relatively small and inconsequential mistake, not the type of sweeping price controls that some people have described it as. You know, for me, though, when I heard her convention speech, I didn't hear her mention this. I heard her talk about economic growth, optimism about America, opportunity. I think those are the things she cares about much more deeply than this bit of a misfire proposal.
I promise I'll get to Kevin Hassett, I promise. But is there a thread, Jason, consistently running through the Democratic Party of populism that just makes it incumbent upon, I guess, people running for office and people in office to bash corporations? I mean, at the same time that President Biden or Kamala Harris pointed out that we came back from the pandemic better than anywhere else, and that, you know, I've created 15 million jobs. You know, it's the private sector that's doing these things. It's our vibrant private sector economy, maybe in partnership sometimes with government, maybe with guardrails. But why the corporate bashing? Do you agree with it all the time? Is it always about corporate greed, all our problems?
Look, I think there's too much populism in both political parties right now, too little recognition that, as you just said, you know, it's the businesses that create the jobs, the businesses that are raising real wages, and the government needs to help create the conditions to contribute to that. But again, there's a big difference. I mean, you're going to get to the tariffs in a moment. Some of the populism we're hearing on the Democratic side is populism light. They're very targeted tariffs. They're this very targeted price gouging proposal. On the other side, you have 10% tariffs on every single country in the world. Every bit of vegetable, fruit you get from another country, a toy you buy, all of that going up in price. So I think there is a real difference in scale in terms of how the populism is implemented by these two candidates.
Okay, Kevin, now your turn. This is not your father or grandfather's conservatism. It's like, I don't know what it is sometimes that we hear from Donald Trump, whether former President Trump, whether it's, you know, suggesting that the president should have a vote on the Fed's open market. You know, the tariffs, there are some bonkers ideas that come out of that side at this point that you probably have trouble defending.
Oh, I mean, if you have a specific thing that you want to talk about, let's
You know what, okay. 20% tariffs across, not targeted tariffs. Tariffs across the board on anything.
Right. Well, the headline tariff policy for President Trump is the Reciprocal Tariff Act,
And what he wants to do is immediately set the tariff in the U.S. equal to the tariff that other countries charge us. And I'll send Steve Leisman a chart, because I know he loves charts, that shows like the tariff we charge on other guys and the tariff they charge on us. And even like our best trading partners, which are probably the Europeans, they're charging double the average tariff rate that the U.S. does, and that really upsets President Trump. And I would expect that next year, that he would pass something called a Reciprocal Tariff Act, maybe even a reconciliation, and that would basically induce probably countries around the world to reduce their tariffs to our rate. But if they didn't, then then probably that's going to be will go up. And the thing is that there are a lot of countries like India, which are like 20% above us, and so I guess the question is, how high does our tariff go on guys like that? And I think that the cap on that would probably be 10%.
Jason, you're probably so tired of trying to defend, I don't know, maybe you like the capital gains, the highest ever at 45%, or unrealized capital gain, but you must have things. I mean, tell Kevin what is the most heinous suggestions you've heard from the other side for their economic, because you got to be at this point getting a little defensive to have to answer, because with so much bad policy coming from the left, you got to be defensive. So give it right back to Kevin Heston.
I don't think it's so much bad policy from the left. I'm not going to agree with every details, but broad strokes, I agree. But look, the problem with the tariffs is you can do this unilaterally. The president has the authority to raise tariffs to 10%. I haven't heard him say it's reciprocal. I've heard him say 10%, possibly 20% on every single country in the world.
It's in the platform, Jason. It's in the platform.
That's something you don't actually need. And there's a big difference. I mean, the price gouging you were talking about before, you need 60 votes in the Senate. So might be a fun thing to talk about on the campaign. It's just not going to happen. These tariffs are going to happen. When it comes to the Fed, I think that's an even bigger risk, but he probably won't be able to do what he wants to the Fed. I don't think he would succeed, but if he did, that would be devastating to the most important and effective institution we have in our economy, one that he has just absolute contempt for.
Kevin?
Okay, so we'll talk a little bit about Trump, but then you got to let me talk about some of Vice President Harris's proposals.
Okay. All right.
Right.
Yeah, I know that Jason doesn't want to do that, but go ahead.
Yeah. So the thing to remember, Joe, is with the economy growing pretty good, with inflation at like 1.8%. President Trump is elected. Before he's inaugurated, the Fed starts hiking rates. And he viewed that as a political move. And it was a political move by a Fed chair who became Treasury Secretary for Biden. And, I have old friends with Janet Yellen. But from the beginning, he felt that there was a partisan angle to Fed policy. And it's something that, he speaks his mind when he's on those things. But you might also recall there was a day in the Trump administration where after studying it and thinking about it, President Trump agreed that he wasn't going to fire Jay Powell. I think I remember I went out and talked about it on TV that day, and the market went up a lot. And when he was flying back at Air Force One for the Middle East, he called me up. He said, "Hey, Kevin, we got to put you on TV more." And so, he understands Fed policy. But the thing I want to do about Senator Harris or Vice President Harris is I want to start by saying that for me, the headline for markets is uncertainty. And so if you look at my friend Dave McCormick, who's running for Senate in Pennsylvania, he's got a YouTube compilation of things that she said in the past, which has gotten zillions of views that are radically different from the things she's saying now, like, ban fracking, ban offshore drilling, all that kind of stuff. And so I think people should go look at that YouTube video and then think, well, is that what she really thinks? Or is what she's doing now, basically doing perhaps what Joe Biden did, which is running towards the middle before they get elected, and then they do whatever they want. So for example, calls for the end of the filibuster so that we can pass the Green New Deal and end fossil fuels. Like there's actually like a statement where she's saying those things. But if you look at the things she does say she's going to do, it's striking the capital gains rate, a taxation on unrealized capital gains. I can't imagine that Jason would support that, especially at the rate that it's at. But the worst thing for me, which hasn't received any press, is that the estate tax goes to 65%, and this is something their campaign has confirmed, but they also want to tax unrealized capital gains in the estate, which is 44.6%. So their estate tax proposal is to tax them 109.6%. They're calling for a bigger than 100% tax on estates. And I know Jason wouldn't support that either, but the point is, I guess, what I think of, and Jason and I have endeavored as former CEA chairs to stay on the substance as much as we can, that if they're proposing a bigger than 100% tax, then it's like we need to understand, have some sympathy, that they've been running a campaign for a few weeks. And usually when you're running a campaign, Jason's been on campaigns, I think Wesley Clark, I think you were on his campaign a long time ago, if I remember right, Jason, that you spend months developing policies, and they've been sort of having to do it on the fly, and it's really quite visible in the things like a greater than 100% tax rate proposal, which I can't imagine they really believe that. But so therefore for me, the headline is uncertainty. That is she as left-wing as the statements that she makes? It's not what we make, statements we make about her. It's things that Dave McCormick has just compiled. And then the second thing is, like, what are they actually going to do? And they're trying to signal it now, but then even then there's errors and flaws in what they're proposing.
Go ahead, Jason.
Yeah, I mean, there's no estate tax over 100%. That's just nonsense. That's not a proposal. Also, all of this has to pass through Congress, so you can just calm down about all of it and not worry too much. The real contrast here on taxes is that we have to make some tough choices. And, you know, I'd like taxes to be zero on everything, but that would mean a huge deficit, would mean we couldn't fund the government that we need. And she has a budget where she's spelled out those tough choices. You may or may not like them. President Trump hasn't spelled out any of them, with one exception, which is he says he wants to raise taxes on the middle class in order to pay for the tax cuts for high income and corporations. He talked about replacing the income tax with tariffs, and then the across the board tariff proposal is like a small version of that. Heritage people have been out there pushing that and defending that, and that's a real big difference. Is our taxes and tariffs going to go up on moderate income and middle income people, or a tax is going to go up on high income people? I'd much rather do the latter than do the former, and we have to make some sort of tough choice.
Kevin, I'd like to let you have the last word. They tell me we got to go. But Jason, as long as you can promise me it'll take 60 votes, and promise me that the next Supreme Court ruling won't be like, I don't know, 13-2 after she gets in. I'd like to know those two things. Can you promise me those two?
The Supreme Court is not going to be 13-2. Just relax, sleep well, enjoy your life.
What about? Are you sure you're going to need 60 votes if there's no filibuster?
Yeah, they are.
You're going to need 50 for fiscal actions and 60 for everything else.
Well, I hope so, because they're threatening that too, and she's got Chuck on her side. All right, thank you both, Kevin and Jason. It's fun. I like that. Something about that stairway to heaven behind you.
Hey, Joe.
Yeah,
you said I'm more of a Stratocaster guy.
Oh, you are? Awesome. My daughter has one. And you could play Stairway to Heaven for Jason.
Right now, let's go for it.
See you guys later. Thank you.
All right, coming up, we'll get you caught up on some of the top stocks to watch as we make our way to the opening bell on Wall Street. Squawk Box, be right back.
a lifesaver.
Welcome back. A little more than half an hour until the opening bell on Wall Street this Monday morning. Frank Holland joins us now with a look at some of the morning's top pre-market movers. Hey, Frank.
Hey, good morning, Leslie. Good to see you. Let's start off with Nike. Shares are down in the pre-market following a new note from Stifel saying the sportswear giant is losing ground in the battle for back-to-school dollars. You can see shares are down 0.75% earlier, down 1%. Now, according to Stifel data, Nike, including the Jordan brand, the most popular pick at about 61% of major retailers. However, that's a steep drop from a year ago. It was 88% just a year ago. The channel checks say New Balance is gaining some momentum overall, and Adidas is becoming more popular with women. Also, On and Hoka gaining with younger buyers. As we all know, Nike's facing increased competition in China. Shares are down more than 20% year to date. We also have some C-suite news. SolarEdge shares moving higher as the company announces its CEO is stepping down effective immediately after 5 years in the top spot. You can see shares are up more than 6%. Zvi Lando will remain on the board and be part of the search for a new CEO. Shares are negative year to date, down more than 60%, but as you can see right here on the chart, they've rallied in recent days with Fed rate cuts being one factor for the upside move. Also, we're looking at U.S. listed shares of Pinduoduo. This is an earnings mover. They're plummeting in the pre-market. You can see down almost 19%. This is following earnings again. The Chinese online retailer, they missed revenue estimates, but they did beat when it comes to operating income. This is the parent company of the fast fashion brand Temu. Again, they missed revenue expectations but beat on operating income. Management commentary also really weighing on the stock. Executives said they would accept a short-term hit on profitability as the company invests in the platform. They also plan to see lower revenues because of increased competition. Again, shares down 19% right now. Back over to you, Leslie.
Big move there. Thank you, Frank.
We're not going to do the Babe Ruth story. Did he really call it?
That's the question, yeah. So this Babe Ruth jersey from 1932 where he called his shot supposedly.
Some people say he was pointing
$24 million.
That's unbelievable. But he was pointing at the Cubs dugout.
Or at the pitcher saying, don't throw it again.
I know.
And there's grainy video, but hey, somebody's willing to put down $24 million for a 92-year-old jersey.
All right, let's look quickly at the futures, and then we'll go toss it over to Squawk on the Street. That's what's happening. You know what? I'll bet you they update you on where the futures are on that show. Anyway, thank you both. Make sure you join us tomorrow. I don't know who else is. Squawk on the Street is next.
Good Monday morning. Welcome to Squawk on the Street. I'm David Faber alongside Jim Cramer. We are live from Post 9 at the New York Stock Exchange. Carl has the morning off. And look at that. Joe was preparing you for this moment.
Yeah, I like that.
We are going to look at those futures. You can see they haven't changed very much from when Joe just did them 30 seconds ago.
No, it's incredible.
It's incredible. Let's get to our roadmap. That's also incredible. It begins with the markets post-Powell and Jackson Hole. Of course, those comments from the Fed chair adding to investor optimism. Well, we're getting a September rate cut. I think we're pretty certain on that. How big is the question? Also ahead, the spotlight. This week, it's all about NVIDIA. Wall Street is gearing up for the company's quarterly results due out after the bell on Wednesday. So we still have a couple more days to talk about.
We need a countdown. I mean, if we're going to put, like, post...
How about a countdown clock?
Solana.
Yeah.
Solana, which is a coin nobody trusts or believes. Well, I'm sure someone...
I got to finish the rundown.
I think we ought to put
all right,
NVIDIA
let me finish the rundown. Because we want to also talk about Kroger and Albertsons. Jim and I talked a lot about this deal previously, but now it's heading to federal court. The FTC, of course, trying to block the merger. And it's worth spending some time on.
Oh, yeah.
But the first thing that we're going to spend a little time on is the markets, of course, following Friday's rally. That was sparked by this comment from Fed Chair Powell at Jackson Hole.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
All right, you were out on Friday enjoying a well-earned summer Friday.
Thank you so much.
Give us your thoughts in terms of the market reaction. Obviously, we're getting a cut in September. There's virtually no doubt about that. There is still some debate as to whether it's going to be 50 basis points or 25.
Well, I will say that there was a belief coming into the meeting that it paid off maybe to be short because there would be actual movement, but not big movement if we had the comments that says he was definitely going to cut. Well, it turned out that the short play was wrong. And I think the short play was wrong because what he's really saying is employment. Employment is the issue. And when it's employment, it doesn't necessarily mean that you're going to get a tightening, a cutting that is done on an emergency basis. It's a cutting done, we were talking about this morning on Frank Collins' excellent show, on a celebratory basis. And I think that means things are good. We do not want emergency cuts. Those are horrible.
Right, and we're not going to get those.
No, we're not.
But we are going to get a cut.
Yes.
I assume you believe 25, like
I think
others?
25 because I think that there's a lot about Jay Powell, which is to say, look, there's no panic, and we can do 25, then we can do 25. Jay Powell does not pay attention to what we do. The parlor game of 25, he's above that. When I say he's above that, he has his view. He has a long-term view of the economy, of actual economic style economy, what should be done.
Yep.
And he has a long-term view about the role of the Fed, and the Fed being a stable force, and 50 is not stable.
Right, 50 again would be something people maybe say, whoa, wait a second.
Yeah,
Have we
what does he
underestimated
know
just
that we
how
don't
bad
know?
things
And he
are?
doesn't like that. I mean, I think one of the things he's really kind of gotten right that the last two Fed chiefs haven't gotten right is what you can do is you can signal for weeks, and then you take action, but you don't take action that indicates that things are terrible, because the economy is not terrible.
All right, and what does all this mean for stocks at this point then?
Well, I do think it's very bullish. I think that that's what you saw Friday, was that maybe there's an expectation that things are going to be a very good soft landing, but it's going to be countered, David, by the overemphasis of NVIDIA.
Yeah.
I mean, you go from Friday, Jackson Hole, okay, well, we passed that test, to then we go to the NVIDIA test. I think we have to end the tests. I think we have to just say, look, that NVIDIA, even though it's 6% of the S&P, 7% of the NASDAQ 100, is not so important that it can derail an AI revolution.
But it is that important to the market.
Why? Because it
you
has
can
a
talk about
10%
its
plus or
actual
minus?
7%, but it has an impact on so many of the other companies, of course, that are all wrapped into the basic thesis that did power our market higher earlier this year for a period of months. And we should say, obviously, it's last week Jackson Hole. This week it is all about NVIDIA.
Well,
in terms
okay,
of
so we have
the
two
quarterly results. We do get them again after the bell on Wednesday,
Yes, we do.
which gives us even 2 more days to talk about it.
Well, we can start now. There are
Let's
two
start.
people. There are two people in NVIDIA that matter. There's Jensen Huang, CEO, and then there's the amazing CFO, Colette Kress.
Yes.
You will have so much cash after this quarter that the deployment of cash may matter. Now, I happen to think that one of the reasons why Apple went from 200 to 220 is a recognition that the buyback would be accelerated. It's not talked about much, but it happened. It is happening. I think that Colette Kress says, listen, we have so much money that we have to start buying back a huge part of our float. That would be very bullish. Jensen, I think, has to talk about how it didn't really matter that Blackwell was somewhat delayed because there are more customers than ever. In the meantime, the H200, which is a very high margin product, will help them. Now, one of the things that's great is David, you don't do fantasy.
I don't do fantasy. No,
Okay,
I'm a purist.
I live in a fantasy world.
I'm a purist. I like to watch the teams I like, and I don't like to be thinking about the other team's player who I may have in my fantasy
all right.
team doing better against my team. So
Well, my reality is subpar. So I have an alternate reality that's much more fun.
Okay.
And
bring us into your alternate reality.
Okay,
Jim.
my alternate reality is that Ben Righteous, who I've now become, I go back and forth with him, don't get anything in.
Ben, you want to tell people who this gentleman is?
Ben Righteous is the CEO from Melius, who the company takes very seriously.
Okay.
And anyone who watches him and reads him knows that he's a serious practitioner of the game, as was his father.
So he's a serious analyst who covers NVIDIA.
Yeah, his father was when he ruled the chemical industry.
Right.
And he says he does what's called a triple Lindy. He says you have to do a triple Lindy. It harks back to the Olympics. And he says that you need to beat 2 billion this quarter. You need a guide up of 2 billion, and then you have to have, this is really fabulous, say enough to imply that Q4 grows by another 2 billion. So it's 2 billion, 2 billion, 2 billion. Thank you, Ben, who is, I think, the best at the whisper, which obviously matters to people at home, meaning that there's a kind of a sub rosa effort to be able to say this is what needs to be done. I like this, and the reason I like it is because this is where Jensen can blow things away.
Again, so the idea that you need an upside guidance of 2 billion on top of whatever so it's 34 billion or so.
Right. Now remember, 2 billion is huge. I mean, even if Apple were to report and there was 2 billion upside, people would say, wow, I guess it's a new cycle, we gotta start buying. I think that what will happen is that you'll hear about. Can you stop that with the wire?
They have wires.
Stop it with the darn wire. I'm like trying to
gets
focus.
caught in your feet.
Well, the sneakers you wear, which not even are they Nike? What do you wear?
No.
Hoka?
There you go.
Okay, there we go. We're gonna get to Nike, and you're wearing Hoka, so I didn't know you were gonna demonstrate proficiency. But I do think that Jensen, if he talks about the more than $2 billion,
Yes.
you're all going to say, okay, not blowout, but good enough to keep it here or take it up a little. I know that's boring. I know that's an incremental, but that's why I'm saying maybe the whole focus on Nvidia is not leaving any room for the idea that hey, it's a little better than expected. So there's the $2 billion. You got the $2 billion number. Now, Ben has been very good at predicting what's expected. And by the way, he does a triple ND. He has one of my favorite movies. He has a picture of Rodney Dangerfield back to school.
Yeah.
Doing a triple ND.
Oh, of course.
Extraordinary.
There was a great moment in film.
Extraordinary.
Yes.
I think what I would regard as artistry.
Yes.
Ben Ramses.
Yes.
Artistry.
A lot of this will be dependent, of course, on the continued growth of data centers.
Yes.
At a rapid rate.
Oh yeah, I mean one of the things he does.
I do wonder longer term, Jim. And we haven't had this conversation in a bit of time in terms of just the development of AI and where things stand in data centers. We talk often about power. I don't know when that day is coming that they're truly going to be constrained, but it may well come.
Blackwell
and
must
that is
be
going to
cool.
That's going to be something we're talking about a lot when we see the first signs of it.
David, that is so strong, and what people don't understand is there are whole regions of the country that are maxed out. They can't build data centers anymore until there's more. The grid is updated, and I think there's a lot. Like the southeast, the grid seems to be overwhelmed, particularly by the way in the Maryland, Virginia area. There is a chart.
Although every time I bring on the person who runs the utilities or ahead of it, big utility. Last week I had ERCOT, the Texas.
Yeah.
And they're
I like
very
ERCOT.
confident. Their projections are stunning in terms of how much power is going to need to be increased availability over the next 4 years.
They better be confident.
And yet they seem to be confident they can meet this incredibly growing demand. But there are many others, Jim, who believe that will not be the case, and that will be the first break on sort of this overall demand.
I want to stay focused on it because Alphabet, according to Melius, plus 91% growth in CapEx. Cloud CapEx we're talking about. That's like Microsoft 55, Meta 31, Amazon 54. Those are percentage gains in the number of data centers. David, there's no way that you can route that much electricity to these companies. Not right now. So in other words, you need them to burn cool. Now there are a lot of companies that are trying to make it so that they burn cool. But it's going to fail.
I'd love us, one day we've got to get into a data center. Maybe,
I'm working on it. I haven't in.
And then go through every single thing that's in there and
I
try
have,
and
and I'm
explain
gonna
to
do that.
people. Well, can I come or no? That's a
It's
bad
gonna
money.
have-
That's
it's
gonna be
mad
mad
money, and I have it,
You
and
won't
it's
do
been-
it for. You're on this show too. It's an hour long as well.
Well, so is Will Frost. That doesn't mean that we're going to do a data center.
That's not a sufficient answer to that.
Well,
question.
it's a total non sequitur, but I happen to love Wilf.
Yes, Wilf is my co-anchor today. I'm at 10.
Yes,
Very excited to have Wilf back.
Okay,
but-
well, you have Vertiv, which is busy trying to work on this. You've got Dover. You have Eaton. You have Jensen, who cares more about burning hot than... A lot of times when you talk to him, he mentions it very early on, maybe before you can mention it. I think it's important. And you know what, by the way, the gating factors are not how much the hyperscalers going to spend. They have it.
It's power.
Yeah, because
well, it's also. At some point, the data. There won't be any more data to hoover up.
Agreed.
And
They're
then I don't know
going
what
to
happens
be video.
then.
Video takes a huge amount. David,
Video's gonna
I
end up
switched to
being-
Meta AI. It's really only good for like kind of pop culture, like Carl stuff.
Yeah.
Well, Carl knows far.
Carl's amazing.
I
He's
now,
his own AI.
Yes,
Pop culture.
he does. So I've switched back to GPT, but I dabble with Claude. Claude is very good. I call it Brains.
Yes, of course. This is the beginning of the beautiful future. Yeah. When we return, the FTC versus Kroger and Albertsons, the two supermarket chains, are heading to federal court today. They're going to try and defend that merger. It's announcement almost 2 years ago at this point. Let's take a look at futures, of course, as we get you ready for an open of the market this day and this week. 18 minutes from now. Horse walking the streets straight.
Dairy.com.
All right, let's talk Kroger Albertsons, of course, going to court. Finally, Jim, after a long period of time. It's a deal that when it was announced, of course, we talked a lot about it. We talked about the antitrust challenges specifically. Not unexpectedly, it was challenged by the FTC. And now they head to court to try to get a preliminary injunction against the closing of the transaction. For its part, of course, Kroger says, you got nothing. I mean, here, just one of the things. The complaint, they say, willfully blind to the realities of the current grocery competition. This was in their response, obviously. Including they insisting on maintaining an archaic fiction that limiting grocery competitors to supermarkets. Of course, one of their key contentions is that the likes of Costco and Walmart are the real competitors these days, and that in fact they are going to only reinvest in the business from the savings of the deal and lower prices even further. Another key consideration here is the divestiture partner, CNS, which has agreed to take on quite a few overlaps in terms of stores. But then that question that we brought up so many times in other deals as to whether it can really represent a viable competitor, the FTC says no way.
Right, well, the FTC is not wrong in the sense that what's happened, the reputation of the FTC is somewhat on the line here, because they very famously allowed a Safeway Albertsons deal.
Yes.
And they spun off once to a company called Hagen, which had a small store base, and Hagen went bankrupt. And next thing you know, the Safeways became Safeways again. So it completely failed. And ever since then, the FTC, and by the way, the antitrust division of the Justice Department is not really against this. Ever since then, they've said, no more deals. Now, what's happened against that is, it's really been solidified that Walmart and Costco, and to a lesser extent Target from last week, but Walmart and Costco are the competitors. And then Amazon will be a competitor when it comes to same day.
And Target, to a certain extent, a competitor as well.
So what's happened is that, on the one hand, yes, any divestiture is viewed suspiciously, and CNS is very big out. It's
And by the way, I should
stores.
add, it's at least 413 stores is what they're talking about, agreeing to divest the CNS wholesale grocers, which they're largely a wholesaler and distributor.
Yes. It is an archaic view to look at this combination as against other supermarkets.
You believe that is the case?
Yeah, by the way,
question,
Costco opens up an
whether this judge will in any way agree with that, or, I mean,
they won't.
There's a big spread here to the deal. Yeah. We can take a look at Albertsons stock price. Of course, they did pay a dividend. Remember, it was a 34 and change deal. It came down because they paid a $6.85 dividend, special dividend, but it's still about a 30% or so spread to the price.
And that should be, because I just look, Rodney, the CEO of Kroger, oh my God, David, he really and truly is kind of betting the farm on this one. Mm-hmm. When I say betting the farm, meaning he's just not ready for this deal to fail. Not unlike, by the way, we're going to have to talk about Nippon Steel, by the way.
I'm happy to.
But I had Rodney McMullen on the show on Mid Money, and his contention is, it's so obvious, it's plain as the nose in your face, that you can't ever think that this is done in order to be able to dominate the grocer in the town. But I will tell you that we always forget that there's more than fresh food. There are aisles upon aisles of things that Amazon same day soon, can give you at a great price. So it's Amazon, it's Walmart, it's Costco, it's Target. David, in other words, this deal may actually imperil Kroger if they don't get it done. Now, that's not what anyone's thinking, but we saw that they blocked Rite Aid.
Yep.
Remember they blocked Rite Aid? Rite Aid is a shadow of its former self. So they were wrong.
Well, you want to explain quickly? I know this is
Rite Aid we needed Rite Aid to merge with anybody, a viable competitor,
and then
CVS.
They weren't able to do that.
Now, CVS and Walgreens are retreating rapidly. Amazon, same day, is aggressive. The rollbacks in price for this stuff
all
cost
this coming in the backdrop of arguments about grocery prices and inflation as well.
But Albertson's saying, listen, we're the union alternative, and we do have the union president. Harris is not president yet.
No.
So, but the FTC just hates this deal because they don't want a Safeway. They don't want a Hagen. You know what they call when Hagen.
They need a big win at the FTC. They will, of course, claim they've won many cases, but many of the high-profile ones, whether it's Microsoft or Amgen Horizon, they have not proved victorious once they brought them.
They don't want, and this is what everyone should remember, They don't want a hagway. That's what the Safeway deal devolved to. Hagway is what they called them. My daughter had a hagway across the street from her. One day it was a Safeway, and then when I went out to see her again, it was a Hagen. Then I went to see her again, it was a Safeway. I mean, come on. That's not good for the FTC.
Get ready, you got a mad dash coming up, of course. Let's
Standing?
Yeah, we got it.
Standing
I don't think we're
dash?
going to stand. Maybe we'll stand. We'll see. You can take a closer look at my sneakers. Take another look at futures. We get started with trading less than 10 minutes from now, beginning another big week here at the end of August. More Squawk in the Street straight ahead.
Good morning, retail traders. We just had a new high on the SPY. Oh yeah. Oh yeah. Oh gosh. Good morning, retail traders. I just couldn't handle listening to that CNBC this morning's lies. I mean, there's other reasons why oil prices are high, just because we're not producing a lot of oil. We have issues with wars. We're a globalist country now. We're buying oil from other countries. We're giving them money so they can sell their oil. But we got wars going on. Then we got the war on oil, the pipeline being shut down, fracking being bashed all the time. Now we're for it. We were against it. So that guy, right, not him, but that other dude, Mike Santelli, he doesn't know. He's in charge. He's supposed to be the guy that knows all the stuff, but he's like a broken record. There's no clue about supply and demand, that's for sure. Good morning, Will. Good morning, Mustang. Good morning, Nate. Mannequin. Skunk Ape. And everybody else in there. Good morning, Room. What time is it? We got 4 more minutes. Good morning, Randy. Good morning, Magnificent. Good morning, Jesse. Good morning, Cody. Good morning, R. Good morning, Ricky. How are we all feeling this morning? I'm going to get rid of them dweebs. Oh, that's that guy right there. No, it ain't. That's another one. So we've got NVIDIA on watch. I'm going to raise the 122.41 up to the, I don't know, probably right there. Okay, where's my, huh. I don't see I don't get it. Oh shit, here we go again. Fuck. It's going to be one of them mornings I can see right now. Something ain't right here. Come on, hurry up. Anybody else having issues with toss today? So that's NVIDIA right there. PLTR in second place. PLTR has a knife. Tesla down $2. I'm going to set an alert off this trend line, off this head and shoulders, to the right shoulder line for Tesla. Come on, you dog. Spies broke out. We're up $1. So set an alert on the, it probably dropped below that. I'm going to stick with my 561.78. Mara down 42 cents. More, it's got more to go. right above 1801. We almost hit my target. We got TSM down 118. Ooh, SMCI is down 968. Here's a double bottom on SMCI. SMCI on watch. Now they're being a little bit assholes here on CNBC, saying that bubble, bubble, bubble. And I don't believe them one bit. Platform's up. Oh, SPY's already up. Interesting. Haven't done that in a while. So SMCI. August 30th. Oh, God. These suckers are way too much. Yeah, I ain't doing it. I can't afford it right now. Well, I can afford it, but I ain't going to do it. I ain't paying that kind of price. So blow that off. SPY's taking off for some reason here. I'm going to put the video up over here so I can see it. Okay, we got 3 white soldiers with a spinning top. No, I mean, I don't know what. So let me see the SPX. Damn it. That fan, I'm going to have problems with that sound of my air conditioner today if you hear that rattling. So the SPX put for the 26th, 56, 5620 or the 31. $560. I got the 50. So I'm just scalping the 5630 right now at $560. To the 9. One more dip down right here. Okay, get ready to get out. Out at $7. Nope. They didn't give me 7. 650. Shit. That's all right. So that's my first scalp of the day. SMCI, I don't want to look at that today. It's too high. Carvana's down today. Boeing's down $1.93. Coin down 203. We're at a pivot point area on coin. If it wants to hold, if it not, it'll drop more. $208.55. Donald Chewy down 12 cents. Meta. Okay, Meta's moving up or down. So Meta, 1, 2, 3 on Meta. 1, 2, 3, 4. So it has to break here to the upside. 525. Let me see here. Watch Meta. It's the 20-day 1 hour. We're at the 63 or the 200 SMA. So that really has to hold here. I got the 200 EMA below it, but like I said, I love that SMA more. I'm just trying to get used to the EMA. So we've got a spinning top. Let me see Meta, see how expensive it is. SPX is pulled back again. Watch some Meta. I can't, I'm not trading that one. At 530, 535. We'll get 3. Some Meta's at 535. I'm going to grab a Meta here. August 30th. $535. Okay, get ready. I'm gonna put a tight stop on it too. I'm not in it yet. I'm just watching. Ooh, nice. Nice. $3.25. So I got 3 at 3.25. Beautiful. Let's see if it works out here. Oh shit, drop more. Spice testing the 200. Baba. Look at. We got 3 black crows on NVIDIA. Baba's a nice little pullback. Despite the U.S. limits on China access of NVIDIA chips, tech titans of Alibaba and Tencent ramp up AI investment. $7 billion worth. NVIDIA fuels Chinese AI growth. Fuck, come on now, don't drop any more. Okay, SPX, is that support? SPX? Damn inputs, okay. Calls? The 5660s. They're on watch right now. Let's see if I can get the lowest possible entry here. $4 would be nice. 430. It could dip below it one more time. Let's put a trend line down there just in case. We got 2 of them actually. Let's use the wicks this time. And the body. So they're pretty much even. Let's see if I can get this for a double bottom at $4. $4.10. Meta. Oosh, Meta's at 284. Shit. It's all right. Might have to get out of this trade. Or add on. Yeah, I think I'll add on. You got a falling wedge. There's $4 for SPX put. I mean calls. $2.83 add-on to Meta. Buy here at 350. We could drop down and hit that for a double bottom, but we're definitely at that support level with a tight stop at 360. Are you still in it? So I don't want to get too many trades. I got Meta and SPX here. You think it's a short today? We'll see. I got average 283 and 325, and I got 6 contracts. I might have to stop out of it. Come on, Meta. So what did that come off of? Okay, perfect. No? I guess I don't get it. So I'm about even on Meta right now. I got 283 and 3 1/4. Where's Jim's YouTube channel? I can't help but look at that chick, man. She's beautiful. Please don't bury me down in that cold, cold ground. Hold on. We're at 4:30. We got a Head and Shoulders. Inverse Head and Shoulders. Okay. I got an average of 304. Ooh, that I didn't want to see. Shit. Okay. I just got a couple of contracts here. Now that makes no sense. We dropped a big old candle and it's back to 360. I didn't have time to get me another one. So that could be a solid support right now. Let's hope it is. For now. Break the 9. We got a 1, 2, 3 up here to break, or an exit idea. link. The video is getting close to my support. One of them, in a way, that I did in the video. Oh, yeah. Right on it. Keep an eye on the video right here. Now, these fat cats are very bearish on this stock, and I don't get it. I really don't. Period. As far as I care, they can go suck my... I gotta watch SPX. I'm down 20 bucks on it. We did break above the 9 for 1 minute. We can retouch the 63 and hold and then maybe come back up. But right now we have an expansion pattern. Kinda. Well, a bull flag. So my meta's at 310. If you're not comfortable in the trade, get out. You have to know. You have to get that gut feeling. I'm gonna stick with it. We do have another inverse head and shoulders right there. I'm gonna stick with it. I got a booger in my nose that just keeps bothering me. SPX is at 380. I'm still in it. We've got to break this flag. 1, 2, 3. 1, 2, 3. 1, 2, 1, 2. So we got a 1, 2 and a 1, 2, 3. 390. Let's break it. And the videos fell a little short of my support that I called in the video, so I'm still watching it. It's a bull flag. You see, you got to stop listening to CNBC. They're so full of shit. I'm going to tell you why in a second. So now we retested the 63 on the SPX. We have to hold here or I get out of the trade. We have... Oh. 1, 2, 3, 4. Okay. We're going to find out here in a second. This thing wants to break out. I'm going to give it less than a minute. We got the double bottom on the 63. I'm gonna call that a touch. It's not, officially it's not a touch, so I'm gonna take it off. Yeah, it's gotta be a touch. Now it's gonna be a touch. Man, I'm getting ready to. I really want to buy NVIDIA here. I got too many stocks. This will be 3 if I jump into NVIDIA. I'm gonna do it. I don't want it. And I'll be in 3 stocks. That's a record. The 132 strike or the 131 or the 135. It's 135. It's a little too far out of the money. Meta. So I'm gonna just buy one contract at 131 when I get ready here. Randy, watch Baba here. There's something going on with it today. Okay. Come on, break out, bitch. We're at 370. Should have grabbed me some there, but I didn't. Okay, this is the last chance right here. 1, 2, 3. I had a couple of times to get out of this, chances to get out of this, but I did not. So I'm going to just wait a little bit longer. We're getting ready to squeeze. I wish I wouldn't have blocked that punk on Stock Twits. I'd rub this chart up his ass. But I don't want to communicate with him anymore. I'm going to draw a snake out here on NVIDIA. You got a double bottom. Right now, let's see. Just 40,000 on the 130 strike. I'll get one of those here in a second. Come on, Meta. There's your 1, 2, 3. Nope. Yeah, I guess. Okay. It's a good way to start the day. I got 126 alert for NVIDIA and the video, 125.96. We have 3 black crows right now on the minute. How far I'm getting pretty close out of the money here. I need to hold this spot on the SPX. A little bit of pressure going on. I got $2 order in. Just got to push the trigger. And the video almost there. My average is 304 on Meta. Not good so far. Thought about grabbing more of them here, but $2. $2.15. But I'm just going to wait this out for a second. I'm curious about NVIDIA though. We're still in the snake. AMD's got a double bottom. We're at the 200. So I'm going to add 6 more here. Give me 70. There we go. 70, 170. Now, if this don't work, I'm gonna get right back out because that won't hurt me. Right now, I'm in trouble, so we'll see. I got 4 more. That ain't a bad average. Fuck. The video's at a triple bottom in the snake. We popped out 1 second there. Might have to sell these things if it won't start to reverse and relook at it. Average 2.28. So we got 228 average on SPX. We're going to find out real soon. Meta's starting, tape's looking a little bit better. I mean on NVIDIA. Tesla straight waterfall. Off the 200 here. NVIDIA, watching NVIDIA now. I don't really want to go real deep in this, but I got about 1,700 in it. $180. We're at 228. If we break this, we have to fight. It could hit that 63 and pull back. Right now we got a 1, 2, 3, 4, and a 1. 2 bits. 3B. A 1, 2, a 1, 2, with a 3 touch. So it has to break here. Damn. It says we're ready. Tonight. I wish I'd held them puts. That would have been a nice tritz. That'd been a real nice tritz. The Bears are definitely in full force. God, I hate that sound. I'm watching the video here, see if it holds. If it doesn't, I'm just going to keep watching it. I'm not in it yet, but I'm going to look at a call. So far, I'm red for the day. If your trade's not working, stop out. I mean earlier. Man, it's getting close. Ooh! Damn, right on it. I really want to buy this bad. Real bad. Mike, what do you think about the video right here? What are you in, Randy? Well, I've got a low support. My third support was, let me see, the 200 SMA, but that's way down there. So I've got 124.67 That's where I set that alert above it. Right now I'm about at 6 in the hole, so I got to get my money back. Snake breakout pullback to the top of the resistance line on the video. I'm going to just wait. I think I'll just wait for that number. 124.67. I'm going to look at 124.67, Mike. Yep. Here we're getting real close. Let's see if this holds. I want to move. I got 60,000 on this 130. They're not that much cheaper. Three white soldiers. Damn it. Always clean. Well, I'm busy right now. If this got to do with that Obamacare, I want nothing to do with it. Thank you. Go, baby, go. I need some money. We need you to break out to the upside. This PX, I got a long ways to go here on that one. I'm a little bit too deep in it for sure. Had to move them up. I expected a pullback, but I didn't expect something like this. On the NVIDIA one, well, I did, because we nailed that 124.67. I'm up $30 on the contract. I got one. Oh, I can't be looking at that. That's a froze picture. Oh. You bought the meta dip? Come on, baby. We're at 490. Come on, Meta, kick ass. I got a little bit too much money in the market right now. Oh, I gotta look outside. I don't want my car to get wet. Blanket. We dropped below my support channel. This is what I charted this morning on the SPY. So it went down below my support channel. Now we're trying to break through it. The video's at 590. I'm up $50. Contract. Come on, SPX. Meta. Meta's, ooh, getting better here. What the hell happened? Oh yeah. Woo! VWAP, Meta. God. Mike? We're at the VWAP. I mean, I got a lot of contracts. I don't know if I should sell here. And we're at the VWAP. I don't like getting in trouble, but what the hell. I'm practically green on it now. On Meta, so I don't know. What do you think, YouTube? Should I sell it? Or hold on? We're going to break the VWAP. mean, you got a lot of contracts, so it's kind of risky. What would you do in the situation? Break it? Right now, I mean, I'm only up $80. No, I'm up more than that. I don't know. Randy, would you sell Meta at the VWAP? You don't play Meta. Well, we need to do something with SPY because it's not the right time to be in it. We did kind of break into that channel of support, which is now a channel of resistance. 561.12. What was support now becomes a resistance channel. Tape's looking good. Oh, God. One heck of a day to start off with. Break it. Break the 63 and the VWAP are together here. Oh, that's NVIDIA. Never mind. Oh, fuck. Where's my Meta? Just a little bit longer here. We're at the 21 on the video. I made some lima beans this weekend, cornbread, and that's what I'm going to have for lunch. There might be some farting going on today. I haven't cooked lima beans in a long time. I just had a real good hankering to have some this weekend. It was kind of rainy out. And haven't made cornbread probably in 20 years. Come on, Meta. We love you. Blake. A lot of conspiracies are going on with that shooter of Trump. I'm just so pissed off at our government right now. It's so scandalous. It kind of reminds me of Kennedy era. I mean, Kennedy wasn't scandal, but the people that didn't want him up there doing what Trump's doing right now. Trying to stop these frickin' wars. Okay, I think this is now or never. Needs to break. 1, 2, 3. No, it could drop. No, make a business decision. I'm going to go turn my water on. I'm going to be right back. I probably need to put up another platform. I'm trading. The video's at 595 and I'm in at 550. It's trying to squeeze. It has to break the 63 still. Snake breakout, pull back. Too much. And I got stuck. I got stuck in the first one. No, I sold the first one. I think I'm smart if I hold it. I'm not too smart. Break it. Oh, I was going to type in 63, you dick. Come on, Meta. Meta broke it. I said it was going to. So this, if we break this resistance, then we're on our way to the 200 EMA. Now I'm using a new case study here, YouTube. I got it in a yellow striped line. That's the 200 EMA. And I'm running it up and see which is better for me, the 200 EMA or the 200 SMA. So I'll be looking at both of them when I'm scalping. And by the end of the week, I should know which one I like better. I'm in love with the 200 SMA. So I need to bond with the 200 EMA. And Bob is at the VWAP with a double bottom. Meta just needs to show a little mustard, get out of the trade at 128.66. That's what I want. You think SPY's heading down? We got a megaphone pattern. Now we got a symmetrical flag. Blech. 58 on 1 hour. Well, let's see here. Then I need to do something. We got a 1, 2, 3 on the SPX. So we'll see if this holds right here. And SPY. SPY book support. I'm practically even on Meta right now. When 249. And it's really not the right time of the day. I'm gonna get my lunch started. Still in them. We're going to see. It's kind of staying pretty good right here. Oh no, it's dropped a little bit, not much. $5.80. I'm up $30. I'm making cowboy coffee. Come on, baby. Give me some money. That's right now. It's going to make a business decision. Come on. We got to break that blue line. Remember that song I wrote back in 2022? In fact, I might play it today. I will play it today. Mike loves that music. I called the perfect reversal in the market when we were at the total bottom. Nobody believed me but me. Magnificent believes it. You'll never forget that moment. For that, I get an A+. Ain't that right, Magnificent? September's the month to remember. Oh. Can't really brag about that. Yes, I can. I've been wanting to be, what do you call it? I can't remember. I can't think of the word. I want to be remembered, but I want it to be a milestone or legacy. There we go. I held on. I'm tough. Tough titty, said the kitty when the milk went dry. Tough titty, said the kitty when the milk went dry. So I need some milk. Please give me some milk. There's the 200 EMA. So that would be an exit idea on Meta. I'm making a business decision. We're at 295 now. I can't tell you how much I'm up in this trade. I don't want to tell you. Oh, God. I got a lot of contracts. I should sell it because I got a lot of contracts and we're at the 200 EMA. I got out. YouTube, I got out of Meta. I made a business decision. Spy. $5.90. SPY needs to hold 560.32. Here, hold on. Cockroach. SPY needs to hold 560.32. Okay. So I'm going to go in there. I think that's the 200 right there. Now why do I got two of them on here? I don't get that. Okay, here's a SPY double bottom. I'm gonna go get my beans.
Ooh, cup. Stupid. That was really smart. Stupid idiot. Shit. I can't believe I did that. I bought me a cowboy coffee pot this morning, or this weekend. I'm going to look at these SPY calls here. Come on, NVIDIA. I got NVIDIA, and I'm going to get SPY, and I'm out of the other ones. So we get the 27th. The 562 strike.
being we're having a tough day today, I think I'll just go ahead and get 10. August the 27th, strike 562 at 122. I'm in SPY. Come on, you bitch. Randy, I picked up some up here. I'm going to give it a shot. Double bottom. I haven't smoked pot in probably 4 months now. I'm trying to get myself back into physical boxing shape. I've been a pot smoker ever since I was 8. That's what you get for living in Portland, Oregon. I haven't had a drop to drink probably in 5 years. Now, I never was really a drunk, but maybe when I partied when I was in school. Okay, we're back down to my entry here. This is descending, and it could almost be in the falling wedge category. So we've got a 1, 2, 3 here at the bottom. And I'm going to draw a trend line. $560.27. We'll know here very, very, very soon. And I'm going to go get, well, I don't really want to leave this trade. Come on, NVIDIA. Still in the video, $40 contract. Come on, baby. Munich, Paris, everybody talk about. Pop music talk about. There was another song back in the day, that one-hit wonder. 99 Balloons, or forgot what that chick's name was. I can't remember the song. I haven't heard that one in a long time. I might figure it out. 99 Balloons, or... Nina. Come on, Spy. We love you. I want to have premarital sex with you, Spy. If I ever had a baby, I'd name it the Spy. I think my next dog, I'll call it Spy. Mira and Riot, inverse head and shoulders. Blanket. I'm trying to think of that song. I don't think it's 99 Balloons. It was a early 80s. One-hit wonder. Blanket. Hickory dickory dock, the stock run up the clock. It struck 560.89 and broke the bottom line and went to 561.78, which sounds great. We're at 138. You can make a business decision now if you're... Come on, bring me. Yeah, Jimmy started in way too early today. I should have waited. I could have got my Mooney. Why did you do that? Okay, I'll be right back. Oh, man. Forgot. You fuckers. Okay, I gotta add 10 more. Shit. I'm really putting too much money in these trades today. It means I need to back off. $108. Man, I tell you what, these beans taste better than they did Saturday. God, they're good. $124, yeah. Now let's break out. I got twice as much. 122, I'm back at my entry. Could get out here, but I'm going to hold on. What is that? Oh, that's that ham. So ham. That ham just melts in your mouth. I'm going to show you what I'm eating, YouTubers. I know you're jealous. Oh, yeah. Come on, Spy. Let's hold up. Don't let these fat cats get out of our way. Damn it. You're making my job hard. Next time, if we get back up there again, I'm going to sell it. Maybe. Ric Flair had some of the best falls. Here's one of the best ones. It was fun to watch. I used to love how he'd get thrown into a rope and he'd do the flip over the rope deal. And his leg would get caught in the ropes. That boy took a beating. Come on now. Do what you do best. And that's break out. I got 108 and 122. And I ain't putting no more money in it. This, no. These beans are delicious. This is definitely 5-star restaurant stuff. I think it was my grandpa used to put pig's feet in his beans. Come on. That was good. If I had more that wasn't thawed out, I'm going to thaw some more of these out for tomorrow. These were excellent. I did a little study this weekend. One doctor said that red vinegar wasn't the thing to use. I was surprised to hear that. Okay, Spy's not doing well here. We broke the 50 on the 1 hour. That's a pretty big gap down. $4 if it wants to dip more. Break it. The mask is on. Jim, do you remember back in 1968 when you lit that match and you were killing ants? Well, them ants were my friend. Do you ever wonder why that log fell out of the tree and hit you in the head? That was me. I wanted to teach you a lesson. Son of a bitch. Okay. They're relentless today. Right now I'm down 200 and some bucks. That's a little hot. Boeing's at a double bottom. Well, I'm going to go get my coffee. break it. It was the hardest day for me.
Expectations pretty high. Stock's up about 8% so far this month. Meta's up about 9%. So those two names have been leading to the upside. But some of those other Magnificent Seven names are still down on the month. Let's bring in our next guest. That's going to be Kevin Green, Senior Markets Correspondent here on the network. KG, you know, we've got 6 out of the 11 S&P 500 sectors in positive territory. A little bit of chop, a little bit of rotation trade here. What's your takeaway here from the equity moves this morning? Because we're a lot weaker than when I talked to you earlier this morning.
Yeah, but not too weak here, Tom. I mean, obviously it's the Magnificent Seven that's getting hit in the market here today, but we are seeing a little bit of a defensive posture. You have utilities up, you have energy up because of the oil spike, you have consumer staples moving to the upside, and you also have 50% of the stocks in the S&P 500 still advancing here today. So overall, when you're looking at the S&P equal weight, it's actually still, for the most part, positive on the session, only up about 1 point, but at the end of the day, it's still a win. So I think we're just seeing a little bit of a cooling off period that's taking place. Also, we had some negative news that could have impacted Meta. We did see Meta sliding to the downside.
What?
Maybe some questions around ad spend in the near term for that business, and that might be also dragging down some of these other stocks. But we're not seeing a broad-based selling event today. It's really in the areas of tech that might have a little bit higher valuations. And once again, we're kind of going into a week where it's light economic data to start off, and then we start getting GDP numbers. We have NVIDIA, obviously, and we have PCE on Friday when you're getting the inflationary gauge. So maybe we just have range-bound markets until we actually get something that can really be that catalyst. But I will say, though, you're kind of right, though. If you're looking at the one-year daily chart for the S&P 500, and you're looking at some of those oscillators, we're starting to turn just a tad bit. We need to really gain our footing over the next 2 trading sessions here before bears start kind of sniffing in and saying, hey, we might actually have an opportunity to short this market a little bit more aggressively here.
Yeah, the rollover that I kind of mentioned before. But Kev, you take a look at what spurred the rally last week, and that was Friday, the comments from Powell. Time has come for policy to adjust. The labor market cooling is unmistakable. We're no longer overheated. Does not welcome or seek further cooling in the labor market.
I think that was the key. Obviously, the headline was "It's time."
Yeah.
But the two things that jump out at me were him saying that about the labor market, and of course his use of the good ship transitory. That made me laugh out loud.
Yeah.
But I think his comments on the labor market, that they don't want it to go any further, or the way he worded it. So
Yeah.
I think that tells you that he's no longer worried about inflation, and he's turning his eyes back to the labor market, which I think is a pretty important shift.
Yeah. And KG, we talked about this a little bit earlier and today on the Future Show. Is that's where there was a lot of caution in his tone about the labor market. Jobless claims on a weekly basis are still really low compared to historical. So that week-to-week read's still there, but if we start continuing to see unemployment rate go up to 4.4, 4.5%, then is 50 basis points on the table for September.
Yeah, I mean, we only have one more print until we actually have that meeting, so that's going to be on September 6th. So if we do see a 4.5% unemployment rate, that might cause a little bit of concern when it comes to the Fed here. The initial claims have kind of reversed their trend. We did see that creeping to the upside at a pretty healthy clip, and that's something you did not want to see. Now, the last 3 prints have actually been below the street's expectations. We're kind of turning that 4-week moving average, sitting at around 230,000, if I'm not mistaken, right now. So that's the direction that you want to be able to go to. But the job numbers that we're going to get on September 6th are probably going to be the nail in the coffin for this market when it comes to trying to figure out if you're doing 25 basis points or if we're doing 50 basis points. And rightfully so, when you start seeing cracks in the labor market, that could actually have a 12 to 18-month lag period when it comes to actual policy. So 4.5% now could actually get a lot worse later on, and it's just really hard to try to tame that market with just interest rates alone. You usually will need some other policies, quantitative easing, as well as even fiscal spending in order to try to shore that up. And it doesn't look like from a congressional standpoint, even from a White House standpoint, they're going to pass any type of meaningful fiscal policies probably over the next 2 years.
Yeah, that's true. And Kevin, it's almost like that snowball effect a little bit when you start seeing that trend in the jobs market start to change, because we were so used to, the non-farm payrolls number beaten on a monthly basis by 50 to 100,000 jobs. They came in with that revision last week, 818. So it's almost like, is this that snowball where the jobs market's a lagging indicator where it's going to get worse? You're seeing layoffs from a lot of big tech companies as they shore up their balance sheet. So maybe Jerome Powell has cause for showing some concern on that front.
Two things. Number one, the question going to be going forward is, can we trust the payroll data?
No.
Right? How far off?
No, you can't trust nothing with this administration. You just can't do it. You're a fool if you do. These people on not these, but the ones on CNBC, I got into a verbal argument with them this morning about oil. I'm still in this trade. That Rick Santelli's, oil's up so much because we have a lot of stock on it. I'm going, what? Are you actually saying that on the air? Let's say I had 40 picture frames, all the same size, and I needed to get rid of them because they ain't selling. They're too high. The prices are too high. So I give a 20% discount on it, and I'm still making money on it. And all of a sudden, they're gone in a week. He's saying that we have an oversupply in oil, that we're at all-time drilling in oil is the reason why oil's up so much. And I wanted to grab him by the neck and say, you idiot. What's going on over there in Iran right now? What's going on over there in Russia? Ukraine? He was arguing with that other guy I like that ran for president. He's a smart dude. That Vedic guy or whatever his name is. He's real smart. If we had peace in the world, oil would be a lot cheaper. I'm still in the SPY. Where's everybody? Yeah, where is everybody? Come on, Spy Blanket. Patrick's falling asleep. You want me to send you Nancy? I'll send her over there with some vodka. Okay, it's a tough day. President French Macron says Telegraph CEO Duvon was arrested as part of a judicial inquiry. They'll come after anybody that's rich. They're starting to come after me. Tempted to buy another. I'm tempted to buy another 10. That'll give me 30. Tempted. Got 1/5 down, $100. We got to break the 63. Go away, little girl. Break it. Let's break it. Break it. We're even. I am. This is going to be it. Uh-oh. 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 September was the month to remember with Washboardjim. September's coming up. So it's going to be the month to remember. Oh, Caroline. Damn. That's one woman I miss every weekend. She's perfect for me. Perfect. Day trader is back. What I'm seeing on this chart is a little bullish or a little bearish. So I got a little tune I'm going to sing kind of as we go here. In one hell of a September, one I will always remember. Let's break out of the snake. It's been fun for heaven's sakes. Well, we've got to break that 36809. Pay close attention to that blue line. The lowest support I want to hold. 362.41. Well, September will be a month I will always remember. There's so much chaos going on. Let's have a ball, we will remember. Today's resistance is at 36809. We're at 125. Let's break this resistance today. The money is on its way. Let's break right out of this snake. Run it up to the 2
62.41.
I'll take it back to the top
of the resistance. Oh yeah.
Well, September,
We are always time to remember.
the memories will always last. We'll take this month and forget about
It
Let's break that resistance
stands today.
Retail traders, let's do it. Let's get the job done. Have a great day.
What are calls and puts? What is the process of exercise and assignment? How are option prices?
How dare you?
priced? What are the option Greeks? These and many other.
Did I ask you to play on my video, honey? Richard, Randy, Prophet. Bingo. Hey, they came back. Oh, hey, Livid. Your goose is loose. You got your, I don't know. You got your, well, hit that mute button down there at the bottom of the page on your microphone. I can't hear you. So I wouldn't worry about it. I'll let you know. There you go. You beat me to it. Oh, that's all right. We didn't hear you. Man, that was good. That was really good to have a good trade for once. Only red on one. Bingo, bingo, bingo. YouTubers, you get out of that trade. Patience paid. We could go higher.
because you're buying something $10 out of the money is your long strike. Right. So this is one of those trades we talk about all the time. You got to have a move to get this, but the payoff is exponential if you get it right.
Yeah, the risk reward's good. Kev, or KG, like when you do something like this, as Kevin mentioned, the fact that you have that ability or the optionality to close a portion of it or all of it if the market's open prior to expiration, I think is key on a directional biased trade like this.
Exactly, and if you're kind of looking at it from a technical standpoint, we are starting to hand it a little bit lower when it comes to meta. So this is just, once again, trying to capitalize and try to recognize the seasonality when it comes to broader equities, maybe some negative headlines when it comes to meta specifically, and looking at ad spend. And then once it does get to a profitable point where a trader feels like taking the spread off, they can do so if a market does exist. So once again, this is just giving you a little bit more time, and which is why I did this example out in October, just because it might take some time for a pullback, but when it does occur, if you see volatility spike, trying to capitalize on that opportunity to be able to take the spread off at whatever the market going rate is at that point in time. And the $500 level would be a very key area of support. So that could be a level where it would make sense to try to remove the position.
Yep, big round numbers. Market likes those. $500.75 is a break even to the downside. And as you mentioned, volatility may expand if the stock does go down or the overall market does go down, and that would increase the price of it also. All right, great stuff. Thanks to Kevin Green, Senior Markets Correspondent here, joining us, breaking down markets and meta platforms. But coming up after the break, Andy Swan from Likefolio, he's going to join us to take a look at Abercrombie & Fitch, one of the biggest winners over the last year. Stock's up 90% in 2024, going into earnings on Wednesday morning. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Do. Can't make me so happy. I'm so happy.
Neil, how's my favorite client?
149.
Can you offer me the same choices as Schwab?
Choices?
Come on.
Yeah. At Schwab, I can get full service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
I know it.
Gotta run, Carl.
Schwab.
Have a choice
Schwab.
in how you invest with Schwab.
Okay.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you. Happy Monday.
All right, happy Monday for Abercrombie & Fitch investors, up 235% from year-ago levels. This is a pretty big story, Andy, with the stock just about $30 off of all-time highs, but this has just been a massive winner. Do you have data that kind of backs up the performance here in the stock?
You know, when I looked at the ticker chart of Abercrombie stock, I thought
When I was in prison for 2 years,
they've gone almost side by side. In fact, Abercrombie has outperformed NVIDIA.
you look like shit today. You're drunk.
The biggest driver of this is, well, number one, they've had a very successful turnaround, and you got to give credit to the.
I can tell he's a drunk.
They're also dealing with a lot of tailwinds.
A druggie, too.
Yoga pants and athleisure is out. Denim and dresses are in. Abercrombie's in the denim and dresses game in a very big way, and delivering to consumers in a way
that eye squinting a little
really,
bit.
Approve of. When we look at Likefolio data for Abercrombie, it's extremely strong on all fronts. Web visits are up very nicely. Most importantly,
Come on, don't
app
pump that
usage
shit.
Is for the back to school season is almost at holiday levels. We've never seen anything like this before.
Oh no. I can't handle this.
Clearly happening now. So I think
Oh God.
a good outlook. You know, at this point, the trade is, do you think that a stock that's moved this much higher can keep going higher? Because everything that we have in the Likefolio universe, from the company itself, from the broader trends that we watch in the fashion industry, says that this company is in all the right spots, delivering for its customers and executing at a very high level.
Andy, they had a double beat in Q1. They raised their 2024 guidance. This company seems to be surging. You saw, you guys already talked about the chart. There's some worried about freight rate levels and the cost of getting their products, and that could affect their margins. You know, there's a bunch of stories out there. The question is the bar really high? It seems like it's high for this name. That's the first question. And the second one is, why are they doing so much better than, say, Anthropology and Hollister? What? It seems like, in my old guy eyes, that they're all about the same. Although Abercrombie seems to be the leader in this category, your data shows they're only behind American Eagle. What are you seeing? What differentiates them?
Yeah, look, the bar is very high. The company adjusted
The
earnings
bar.
35%. That's a really high number. But at the same time, we've seen with NVIDIA, a lot of times when companies are raising guidance, they're actually sandbagging a little bit looking forward. I think Abercrombie may have done that. When we look at the data that we have, they're blowing away what they did last year. They're blowing away what they did in the previous quarter. I think that they're going to be in very good shape in terms of the numbers that they report and the outlook that they give. I don't have any insight into freight rates. If that's a concern for people, then that certainly could be a reality on the ground that we don't spot. But you know, what they're doing better than competitors is actually on the technology side. Like you said, a lot of the clothing, a lot of the fashion trends seem to be very similar. But they have had a very successful launch of what they're calling, I believe it's their wedding shop, you know, which is not for the bride and groom, but for all of those young people that are.
Oh, look at my face. I got to move that.
During wedding season, they have a very popular place for people to shop for dresses and outfits there, and that seems to be working really well and getting people into these app ecosystems so that they can continue to market to them very cheaply and very effectively. And so I think the technology side of Abercrombie is really where they're gaining on all of their competitors. They're at 60% of their sales are e-commerce at this point, something that we thought, you know, just 2 or 3 years ago, we thought Abercrombie would never be able to compete in e-commerce, and here they are dominating.
Yeah, the strategic investments, trying to redo their Hollister brand that's under their umbrella, good. But Andy, if you look at the fast casual trend that's been taking hold, whether it's Temu or Shein or
He's mad.
H&M,
He's watching my channel.
Amazon trying to get into that. Is it sparking more demand because everybody wants to change their outfit every month? But Abercrombie's taking advantage of it because they've got the higher gross margin, they've got the higher price point, and maybe the better mix here from domestic-based retail sales?
Yeah, I think that's part of it.
I left a little on the table.
Abercrombie's just benefiting from a overall fashion trend shift. Look, I'm not anywhere near a fashion expert, but we do get really good data on what the trends are, and denim and dresses are definitely coming back.
Because there's trannies.
Abercrombie is great at both of those.
And you'll have another dress for sale if Kamala wins.
But now the winds have shifted. They've got a tailwind at their back, and they've got the technology to capitalize on it.
All right, Andy. Like I said, only $30 off its all-time high, still up 88% this year. Are you guys still positive as far as your earnings score on this one?
Yeah, this is one of those where it's really tough because you really feel like you're going out on a limb, but all of our data is so positive. We think that they're going to have a phenomenal outlook. Yes, there are potential landmines in there like freight costs and everything like that, but from a delivery to consumer perspective, they're doing a phenomenal job. We think the outlook's going to be great, and we think that the stock could power higher from here.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
Great job, Andy.
Co-founder at Likefolio.
I will tell you, I don't know much about this wedding part of their business, but if you have kids in their 20s and early 30s, all they do is go to weddings or bachelor or bachelorette parties or showers. Their whole existence is something around that part of life. I've never seen it celebrated more. So if they can capture that niche, oh my goodness, that is a great business to be in.
And remember, people weren't going to weddings for about 2 or 3 years, and now it's exploded.
I mean, but everything around the wedding is exploding. Like, you don't go to a bachelor or bachelorette party at someone's house. It's a destination.
Right.
It's 4 days of these things. So, I didn't realize that. That's a really positive aspect of this.
Right. Okay.
You never looked at it like that.
Trade here. Option market pricing.
But you're right.
$20 move in the shares. They don't report till Wednesday morning.
Market maker move.
Yeah, big market maker move for the.
COVID was devastating on that. That's why everybody's kind of really going on trips. That's why they raised the price. 35% inflation rate. That's what a trip costs you more these days, about 20-30% more than what they did in 2020. All right, don't worry. Kamala will come in and fix price gauging.
I took advantage of the high implied volatility, looked at the double calendar, trading, not very expensive because of that divergence. I had to go to the 190 on the upside. That's about $22.50, something like that. And then 145 on the downside. Think about this. $45 range in the calendar spreads from put to call. That's a big move for a name like this. But there it is, Tom. It's trading about, it was $1.20. It's closer to $1.05 now. Yeah. So maybe the implied volatility is coming down ever so slightly. But this gives you positive theta. It gives you an opportunity to be successful in either direction. And you're just looking for a move towards one of these strikes. Either on the upside, you can, obviously, if you don't think it's going to make that move, you can shrink those strikes in or further out. But boy, 51 million shares and that kind of volatility, they're getting ready for something, Tom.
Yeah, and this strategy takes advantage of a move higher or lower, about that 1 standard deviation. Let's break it down. September 6th, weekly options, buying the 190 call, buying the 145 put, selling those same options and strikes in the August 30th weekly cycle that expires in 4 days, the 190 call and 145 put. Roughly, we've got a $1.20 debit up there. That's your risk, $120 per spread. You can see the apex of profitability at or near that 145 strike or the 190 strike. But you've got a range probably of about 135 on the downside, maybe 200 on the upside, where you can still remain profitable. So you don't want it to sit where it is, and you don't want a 2 standard deviation move in the shares in either direction, because that's where you start getting hurt on this. But Kevin, you mentioned the vol dispersion that lowers the price or the risk on this trade. Buying about 108% implied volatility on aggregate in the September 6th weekly options, selling about 157% in the near-term August 30th weekly options expire in just 4 days. You got some assignment risk on those two short options in the August 30th cycle over the next 4 days also. But you can see here from the risk profile, you got a nice wide range for this stock to trade in. That small float, Kevin, 51 million shares outstanding only, makes it potentially a more volatile trade post earnings. But this is a good look at a way to not have to pick a direction, just expecting some type of movement of about anywhere from $20 to $25 in the share with the double calendar position. All right, let's take a quick break here, Kev. When we come back, we're going to take a look at Alphabet, the search giant stocks down about 3-4% so far this month. Is not over 50. It's about $15 from its recent all-time highs. Fast Market's coming right back.
The video's at 600.
Watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Come take my wife. Boing, boing, boing. Loo. La 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 la. Bring it.
Welcome back to Fast Market here on the Schwab Network. Before we bring in our next guest, let's take a look at the markets, which are off of session lows now. We've made some ground back up here. The S&P 500 still in the red by just about 0.15%. The Dow Jones Industrial Average up 85 points. NASDAQ down 0.8%. That's about 0.5% off its session lows. And the Russell 2000 small caps up nearly 0.4%. So we'll continue to watch the action in the overall equity market.
Oh, shit.
But let's bring in our next guest. It's going to be George Tillis, Senior Markets Correspondent here. George, we're talking Alphabet today.
Always clean.
Stock's been weaker.
Yeah, to get an option here. We're going in NVIDIA calls, scalping the August 30th strike at 130 at 550.
What's your take here on Alphabet?
Did you?
I think in the broader context of a breakup, anytime there's sort of a justice antitrust issue that crops up, these aren't really necessarily meaningful pullbacks if the stock does pull back because of that reason. I think, Google, interesting enough, we talked about Amazon last week. I think the reason the stock is weak because
Why?
the stock essentially is the crux or the barometer, if you will, the primary barometer, in my view,
George.
of what's happening from an advertising spend standpoint. I mean, this is certainly the largest ad company in the world, and I think it's a great barometer of the perhaps some weakness in the overall economy. Now,
Oh.
the other thing is I can't just say that's the actual reason. I think that the weakness in the stock has to also do with artificial intelligence. I think if you consider what's happening with Apple, for instance, Apple really conceded and said, we're not really good at developing AI protocols for software, so we're going to adopt OpenAI. I think Google has been plowing so much money in artificial intelligence and really hasn't developed a product that is compatible or comparable to OpenAI or ChatGPT. So with that said, the market, I think, is not necessarily appreciating the stock because of the cost spend associated with trying to develop their own. Now, the other thing is you have to think about the monopoly position Google has. When it comes down to search, they basically control about 90% of search. That again is supported, but that's also one of the reasons why the antitrust department, the FTC is.
Yeah, today I got a little excited at Open. I'm try not to do that anymore.
But I think their valuation also, based on the price action we've seen, because it really hasn't rebounded with the rest of the market from the August lows. I think it has to do with the fact that it's starting to look more compelling from a value standpoint. I did notice if you look at 2025's earnings growth, the estimates are about 3% lower than their historical average, and that's to be expected because of higher costs associated with developing AI technologies. But their valuation is about 25% lower than its historical average. So one would say maybe, this is my thought, if they actually say we're going to integrate some other technologies of artificial intelligence, perhaps partnering up with ChatGPT, that actually might be a huge catalyst for the stock.
George, they're another company that came out and said the risk of underinvesting in AI is greater than the risk of overinvesting. So they're like Meta, they're willing to spend as much as it takes. But isn't search where AI, much like Meta, isn't search where AI is really going to flourish? And this company will eventually, like they always do, get it right. You're right, they're behind. They didn't jump out of the gate, but they're going to be there eventually. And they're going to use AI, and they're putting AI in just about every part of their business, George. So isn't this a long-term safe bet for people who want to invest in AI?
Yeah, I think so, because if you think about the context of, search, large language models that AI uses needs the results of search. And so indexing the results from search is what Google does. And I think that's, internally or in the back end, Google's a mainstay player already in AI. It just comes down to the interface software that the front end user is looking at or utilizing for AI purposes. That's where Google is languishing. And so you're right. What's happening is they need to make more investment. The more investment they make, it's going to push forward or push out further the returns on that investment. And so the stock price is reflecting that today. And that's why I think the stock is down. So, I'm not saying what they're going to do. I think, Google is a very proud company. They want to develop everything on their own. But maybe if they start, relinquishing some of that prospect for integrating their own front-end software and maybe adopting some partnership with OpenAI, that may alleviate some of those cost pressures and CapEx pressures and relieve the stock of some price pressure that I think is partially why the stock is down. I think there's two reasons. Again, I think there's a lot of CapEx in AI that is being built into the price, but at the other side, you have to think about weakness in the economy, and the advertising side of the business is also maybe what's being projected here with Google. So, it's still trading below the 100-day moving average. So you have to keep that in mind if you're looking to go in the snake.
George, real quick here, the way that I look at it is, you do a Google search and the first 5 things that you get on there are advertising. Does that go away if their Genesis platform where you just ask a question to get an answer? If that goes away, that's a lot of their revenue, right? Because they're the search leader.
Well, that's the thing. So, what's happened, you have to kind of separate. It's a good question. You have to separate, the results from search, which is information and knowledge. And so AI essentially is basically bringing it together in a knowledge format. In other words, indexing information. So I think search is always obviously going to be there. The results from search itself are going to publish advertising streams for Google. But at the same time, you have to think about the composition of knowledge. That's what artificial intelligence really does. So it's moving us from the information age, which still is there, obviously, into the knowledge age. And Google is in the core foundation of the information age. They're just having struggles, if you ask me, this is my view of it, that in terms of indexing that information for the sake of creating knowledge. And that's what artificial intelligence results are supposed to give us. So they're behind in that area. But I don't necessarily think that integrating AI in their ecosystem will essentially hurt their core business, which is advertising. I think it'll complement it.
All right, great backdrop for us. Appreciate it, George. It's George Sillis, Senior Markets Correspondent. Kev, the stock's actually now positive. The market's bouncing back here a little bit. It's probably $1.50 off its session lows, back above 166. So I looked at this with the stock down 3.2% so far this month. All-time high of 191.75 that it hit about a month ago. I looked at a strategy. If you think this thing's going to go higher, let's look at a strategy that takes advantage of that. I went out to the September monthly options here, Kev. So 25 days to expiration. And I looked at offsetting some of my costs on a bullish trade. So buying one of the 165 calls, sell two of the 170's 2.5 strike calls. That's where you want it to go. And then buy one of the 175 strike calls. You're buying this unbalanced or broken wing call butterfly to the upside. 250 debit is what we got up there. It's trading closer to 260 now, but if you pay 250 debit, there's your risk, $250 per spread. But Kev, you don't need that big of a move to the upside. Break even 167.50. That's $1.50 above the current share price.
Long a $7.50 spread, short a $2.50 spread. Paying around 250 debit, maybe slightly higher. You got a chance for a triple if it moves towards that 172 level. So remember, what the nice thing is, if you get the direction right, look at the profit graph. It flattens in the profitable area. So as long as the part of the argument about butterflies, they go up and they go right down if it makes a big move. Right. So this one doesn't do that. It holds on to those. The math works on the upside for this butterfly.
Yeah, and Kevin, you look at this, and this is one of those grind higher type of trades over the next 3.5 weeks. But even if it explodes above 175, goes back to those levels, I mean, it's still a double as far as
Remember,
profit.
it's a bullish trade, so you need a move to the upside on the downside where the risk is.
Yep. Break even 167.50 on that one. So expecting a grind higher. You don't need that big of a move to get above that break even. Like I said, about $1.50 from the current share price in there. So a good look at if you think this thing is going to grind higher over the next 3.5 weeks. This type of strategy works in that scenario. Kev, real quick here before we go. Just the choppiness of the markets. Do you expect this to continue?
Yes. Now, remember, you're still in summer markets. You're still pre-Labor Day. So we had a little
say election, you dim dump.
Mid-morning that is softening as we get to lunchtime.
No one gets it. 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 We're going to be volatile until the election's over. Do you understand?
Make sure you download the Schwab Network app. Available in the app.
It has nothing to do with Labor Day.
7 on schwabnetwork.com. Stick around. Next Gen Investing is coming up.
Well, it has a little bit to do with Labor Day. Oh, I never did get my coffee.
Checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
What a rough day.
From the Schwab Trade Desk.
But I'm going to give it a little listen here.
Traders who live and breathe trading. And sharpen your skills with immersive online education.
See, here's the snake on the video. And we had these little soldiers here. So I was down on this trade big time. And I added the calls, and I got to see what. But that was my initial trade. Right in here. Then we knifed. Then we had these soldiers. 3 white soldiers. And look what happened after that. She went ahead and broke on out. So if I'd have been patient, I don't think I could have waited down there because I got in here at the double bottom. And then we had that big knife. Right now we're at 580. I'm going to still hold on to them. Ginny.
Weaknesses down about now 0.9%. So we are starting to see some of the selling pick up, but Alex, it's felt like a pretty quiet session to kick off this trading week, where I do feel like the major catalyst and focus is NVIDIA earnings on Wednesday, or Thursday, I believe.
Yeah, I agree with your sentiment in terms of the earnings date. It's after the close on the 28th, so that is on Wednesday for NVIDIA. It's going to be a big day for this market, and you can tell there's an uneasiness about it right now. I mean, you see it, NVIDIA's not down a lot, but it's down 1.8%. In most of these big mega cap names,
That wasn't hard to call.
Today. A name like Tesla down 3%, a name like AMD down almost 3%, even Apple.
This is why it's so important to watch my videos. Wall Street analysts are bearish. I am bullish. What'd I do? I typed in bearish. I can't believe I did that. What the fuck? I typed in bearish. Oh man, you idiot. No wonder that was the wrong analysis. That guy could have been right. Because I typed in the wrong word. Jeez.
How'd that get by me? That sucks. It really does. Literally sucks. God. Help me. Oh no. How'd that happen? That's quite embarrassing. A little bit. And I think we're waiting for that Blackwell chip. And show you what I'm saying. We still didn't get up to the double top, but we did break the overhead resistance. And we're going to put that right on that wick right there. Bring it to that wick. As you can see, last week we broke that resistance area. This is the weekly time frame, so I am going to use the wicks on this. A lot of times I'll just use the bodies. When I'm drawing a trend line, it pretty much matches right up in the same spot. So that's definitely a solid resistance to break to get it past that. Now we got 3 white soldiers here. After the third soldier, sometimes they like to consolidate and pull back. So we could have a little bitty pullback come Monday, Tuesday, and bounce off this here trend line or bounce off this bottom part of this top candle right here. And I'm going to draw a price line all the way across. Now this is where we pulled back to right here. Support to hold. This is where we pulled back to today. And I'm only using the weekly channel, the weekly candlesticks. And I went right here, you got that bouncing above it. You got this, so you got an equilibrium between that candle and that candle. 124.67. So if you look at the chart on the video, 124.67, right to the penny. May I say it again? To the penny. Right there at 124.67 to keep this thing bullish. Now I'm just using a simple weekly candlestick patterns to try to figure out where I want to wait to buy the trade here. So I'm going to set an alert right above that 124.67, just right above it. 125 somewhere in there, 126, right about in there. So I'll be waiting for this alert just in case it decides to pull back. Like I said, and I'm surprised how the fat cats are kind of bearish on this stock right now. They just say it's the biggest earnings that NVIDIA's probably ever had. We got one benefit, and that's the Pow Pow. Last week, the Pow Pow cracked a few jokes. We felt like we were going to go ahead and get this rate cut, and that would be a good catalyst also to bring this stock up, because usually in a normal market situation, higher rates is not good on tech stocks. But we've had that AI run, and I think they just brushed it off, and we had a huge breakout on this stock. Biggest breakout I've seen in 20 years in the market alone. Some of these stocks in the AI sector run up 1,000%, 500 or 600%. It's just crazy in a year and a half, 600, 700, 800%. Just very unusual for a stock to run up that much. But we did have a real good hard sell-off, which we recovered that in a V real fast. So we're going to take this now to the resistance to break will be the top of this body of this candle right here. And I'm going to draw a price line all the way across on this weekly for this coming week. And that's right around 133.15. We might hover on that double top and then pull back and consolidate in between this channel until Wednesday. Then after hours, we could catapult up
So I said we'd hit 133.15. We hit 131.26 before we decided to pull back. But we did break my 130.12 by a buck.
All the way up to a double top at 140.76.
By the end of the
Then
week.
that'll be your hard resistance to break.
And I forgot we had a short week.
I think we can take it up to 150.
No, we don't either.
A little
We
bit
got
under 150.
Next week's short.
We're going to go to the yearly, daily, and I'm going to see if I see anything different on here, which I don't. We could bring this down a little bit more, and it would match up right in that spot also for resistance levels. And I'm going to change the color on this one here when I do that. I'm just going to take the bodies. Run it with the body right there. Let's see if I can get in here and change that color. We'll make it a blue.
Now we're on
it's
the
right in
daily.
there too, off that support level. The resistance to break come this week to kind of bring it up to a triple top break. Well, that'd be the body of these candles right here. And again, I'm going to go ahead and do another price line right across the bodies of that candle on the daily. And I'm using the daily time frame. And then I'm going to go ahead and change that color to blue also. So now we're going to go to the 1 hour time frame. Let me see one more thing. If we do break this resistance of 130.12, we can start using these next resistance level of 135, and then that next body of that candle right around 139.61. Now I've heard that number before from a few fat cats, that 139.61, and so anywhere around that 140 level, 139.50, 139, 140, you're going to probably see some consolidation. Little Darvis box go to the right and consolidate, and think about wanting to break out past that resistance. That's a hard resistance. That's a real hard resistance at that 139.61. Still thinking long at 140.76 to break on the weekly, but here on the daily, we really need to use that time frame. So at 139.61. So now we're just kind of summing it up. I'm going to take this to the 1 hour. Take it to the 1 hour, 90 day. Again, that 130.12 is a very hard resistance to break. If we do break it, we will bring it up to that next level of 133.15. And then the next high will be right around 135.93. Lord, just a little bit right there. 136.06. 136.06. And we're going to change that color to blue. These blue are going to represent very strong support resistance levels and support levels, because they're critical. This is on the 1 hour time frame. So I'm going to give you a summary of what I think is going to happen here. If we do start to sell off real hard, we're going to catch it off this 200 SMA right around 118.27 and keep this stock right in this range. Unless some bad stuff starts to happen and we get a bad reaction of maybe oil or geopolitical things going on. So right around that 118.38, we want that to hold and be support and play the channel up. I'm going to be very bullish on this stock, I tell you, and I will be trading it. It'll be a great scalper, a great day trade until the earnings come out, and then I might grab a couple contracts into earnings
couple calls and run it up if she wants to go ahead and break out. If we don't break out before that, if we pull back some, I'll take the trade and go a little bit longer with it. So we're going to pull up the 20-day 1 hour now. We're definitely looking at a low support of 118.38 with that second support, that first support right around 124.67. Resistance to break will be 130.12, 133.15, and 136.06. If we can get up there and break all them resistance levels, we'll make it to 139 to 140. So that's it. We nailed the support today. The first support. AVGO. Oh, we got a 1, 2, 3. Broadcom. AVGO falling wedge. Anybody hear that fart? I felt it. Yeah, I did. Yeah, I did. Oh, beans. Oh, shit. That looks good. That looks real good. She's a nice wife. 15 minutes and the fat cats get back? I wish I could have saved that. Whew.
Breaking news. A controversial Trump coin is sparking heated debate.
Damn, I had that titled right. Ah, darn it. I was reading. I'll tell you what. I am not bullet. Damn it. I did have it titled right. Shit. I'm not bearish. I thought I said I'm bullish. Okay. Nancy, may I have a shot of vodka and a Valium?
I had it right all the time.
Around this report, maybe it runs into and stops around 135. Well, if that happens, that could be a really nice outcome for this particular trading strategy. Dollar debit or thereabouts would be $100 in risk, might be a little bit more than that, but for sake of making things easy, just using those round numbers sometimes helps. But the big key here, Jenny, is you're picking a spot, so it's very customizable. The logic behind the 135 was that was the closing high at 2 different points thereabouts and fallen from both times. So maybe even on a big move higher, it runs into some resistance there. If it stops there post the earnings release, this could be a winner.
Yeah, and I would say that it seems like right now there's, of course, an added interest in looking at NVIDIA, trading NVIDIA. I think just anytime there's a major catalyst in NVIDIA, there's even like an interest in some of the ancillary names related to NVIDIA. So I'm sure we'll see that volume only pick up as we get closer to that earnings event. But the next name here has not seen the same degree of love on a year-to-date basis. That is DraftKings, with earnings not in the near term, but it has been able to at least hold on to a modest gain. I'd call this one unchanged on the year, though, Rick. That's DraftKings. We are lower today, 2.5%, actually making a similar move to the downside today as NVIDIA. Walk us through this chart, though.
Yeah, definitely very little net progress since the start of 2024 in this name here. And we can see another situation where we've been trending downward from the highs. But the thing that was interesting about this name to me is you can see that it had more of a triangle.
Oh man, that was a good dip.
2 white dash trend lines. One starting with those
gap fill
highs near 49.57. The other starting back in right around the start of the year, late December, early January. You can see connecting those lows. So we did have more of a triangular shape there, and that to me is always an interesting type of pattern.
Fat cats are back.
It signifies a more low volatility environment, which is often the precursor to high volatility when you get a breakout in either direction. In this case, we broke to the downside. We retreated back to where the gap formed back in November, that blue dashed line. We made our way very close back to that $29 mark. Then we pushed back to the upside. We have a very small, very narrow blue channel between our encompassing our
man, that looks
moving to the upside.
That looks kind of sweet, but I don't take it.
We actually seem like we've made
coin down 363,
but we haven't been able to hold our, excuse me, not our channel, our triangle. We made our way back into our triangle pattern yesterday, but we're not quite able to hold on to it now. So kind of a curious situation, Jenny.
Yeah, definitely a curious situation. So as far as like momentum, and I mean, like a pretty optimistic analyst note today, we were talking about the NFL season and football season just in general. This should be a pivotal moment for DraftKings. So is momentum giving any positive indication here?
Well, momentum is something that uses trend lines and support and resistance lines similar to price, and this is a pretty good example of how that can come to pass here, because when you look at our RSI indicator along the bottom, you can see that we had that light red, that pinkish color trend line in play, and it recently was a boundary to the upside once again during the past few days here. So this trend line has held true multiple times, and we did have another steeper trend line in the darker red color there. We also made our way into the oversold area briefly, but we fought our way back above that trend line and above the 50 midline that separates bullish from bearish momentum, but now stuck at this trend line once again. So I'll be really curious to see what happens if we do manage to break above it and get some kind of relevant breakout in price as well. So momentum back in the hands of the bulls for now. Nice recovery, but stalled out at a familiar area here.
So now when we watch some levels here, again, we don't really have any major catalysts coming up next for DraftKings. So some support and resistance you're watching. Of course, a name that has underperformed, but has been, I mean, like we look at it as a 2-horse race in the overall online gaming world. So walk us through the levels you're watching.
Sure, and we can see now that we did make our way back into the triangle. We can also see when we add our volume profile study to our charts here, that blue bar graph on the right side of the screen, the area that we topped out near today is interesting for a couple reasons. One is that we already knew it was near our 63-day exponential moving average in orange there, but it also happens to be quite close to the volume profile point of control, the area of heaviest trading. So we had kind of a double confluence of resistance there that price couldn't quite hang on to. Now we've fallen below our 252-day exponential moving average as well here. So you can see now we're near that green line that represents the low points that we saw before we had our gap down near about 35 or so, right around that area. So that's a supportive area. Light green line below that was the next set of lows near 34.40. To the upside, we've got the high point, the recent kind of series of highs around 37.81. Beyond that, we've got the upper boundary of our trend line. So there's quite a bit to progress through in either direction here in this name.
Yeah, and I would say the name that we're hoping for some continued upside here. So appreciate the insight and the breakdown. As always, Rick Ducat, our chart master.
SMCI had a good sell.
And Alex, a very different chart, of course, a very different company and different stock, NVIDIA versus DraftKings. So
they can drop
with this in mind, you're looking for a more to bullish example trade.
I wouldn't be ready for it yet.
Season coming up, but looking to use some of
Snake.
this higher volatility and some of those levels that Rick.
Snake breakout. We went in kind of a bull flag here on SMCI. I don't trade DraftKings that much. I'm not a gambler. Come on, you frick. What the fuck? What's the deal here? So this is called a Darvis box. Come on. Don't get upset, Jim. Don't do it. Don't do it. Don't do it. Well, I don't know what to say about this one. I'd say it comes back down and hits 5 1/4, and then you buy it long. Actually, probably right here, 551.65. 551.66 is where I'm going to set my alert. Hey, Jim, open the door. It's your neighbor. And what's up, man? I was watching YouTube there, and you were talking about SMCI, and I got a little confused. Why'd you decide to change your support level from the top of the snake? Well, it's pretty simple. Because I spotted the double bottom first, Ernie. Oh. That flew right past me. Yeah, I figured it would. Tell your wife she made a good dinner for me last night. She said she was at church. She was. I was teaching her the Bible. Every Wednesday night we worship together. You're just joking, aren't you, Jim? Yeah, buddy, I'm joking. I wouldn't do that to you. That's down $50. Oh, God, look at that. Chewy.
Chewy's at the 200 on the 1 hour. That could be a good one too. Oh, Ginny.
PDD, which is the parent company of
Look at her
Tesla.
today.
So
She
here
looks
we're
like
seeing
a
more on these
secretary.
results, which is why we're seeing the sell-off today, as Caroline Woods, senior markets correspondent for the network. So Caroline, I mean, wasn't this...
I mean, I watch a lot of women, how they dress. A lot of them dress the same, like Caroline. But this girl comes in all kinds. Farmer's daughter, stripper. Now she's a secretary.
On the earnings call, warning of really potential challenges ahead, and there were quite a few to note. And the company really maintained that the pace of growth that they have been seeing isn't sustainable. So they did see really impressive growth. Sales rose 86% in the quarter to $13.36 billion, but analysts were looking for even more growth.
Oh,
Their
God.
expectation was for around $14 billion, so it was a miss on the top line. Bottom line beat, though, adjusted EPS of $3.20 easily topped analysts' expectations of $2.70.
Well, let me analyze it. Oh, God.
Operating expenses jumped by about 48% year over year to $4.23 billion.
This is going to be a good trade.
By increased investments in marketing, advertising, promotions in order to attract shoppers. Many of those ads, I swear, are targeted to me because I get them all the time on social media. Sales and marketing expenses specifically were up 54% in the quarter. And then looking ahead, this is where PDD got very cautious. I think this is the most cautious I've heard an earnings call in quite some time, saying, while encouraged by the solid progress we made in the past few quarters, we see many challenges ahead, noting revenue growth will inevitably face pressure due to intensified competition and external challenges. Profitability will also likely be impacted as we continue to invest resolutely.
Caroline,
Profitability may
shut up.
fluctuate in the short term, but gradually it will trend lower in the long run. Now, going back to the investments, PDD said it will invest heavily in the platform's trust and safety in order to support.
What do I got this? Oh, that's 200 SMA.
Adding, we are prepared to accept short-term sacrifices and potential decline in profitability.
So,
Jenny, as you said,
man,
down 29%.
I like this here a lot. This
And also notably bringing some of the competitors
63.
down. Alibaba shares are in the red, down about 4% today. JD.com is down about 4% today as well. Amazon, of course, is another big competitor here in the U.S. Shares of Amazon under pressure as well, down a little less than 1%, although we know Amazon is so much other than just a retailer, so it might not be in relation to these results.
Caroline, it seems like investors are largely bailing on the stock today, or at least that's what the price action says with it down 30%. But analysts, I have never seen something so skewed to the buy that I do in this name. I see 98%. I don't know if that's changed or not, but they're not jumping ship on the analyst side.
No way.
I have 100% according to Refinitiv or Workspace, whatever you call it now, and I haven't seen any changes after that earnings call that really stress that the pace of growth, both in terms of profitability and in terms of revenue growth, just isn't sustainable. The median price.
I'm telling you, this is overdone.
PDD is currently trading at $100 a share, so the median price target implies the share price to double. Obviously, today's 30% drop really having a significant impact on that. But in terms of the challenges, we'll see. Who knows? Maybe analysts are just kind of figuring all of this out and will come and have some rating changes or have some price target changes. But in terms of the specific challenges that the company faced, they were very clear about this, which I appreciated, at least as you're going through the transcript. It was very clear about what they see in terms of forward-looking guidance. But they talked about intensifying competition. There was a lot of talk about that, saying the competition we face is growing stronger. Competition
I'm going to buy a contract. I'm going to buy 5 of them.
Our global business is facing significant uncertainty from intense competition and evolving external environment. These factors combined will inevitably cause frustrations to our business. So there's competition. There's also changing consumer demand. They talked about a more thoughtful consumer, referring to it as rational consumption on the call, and a consumer that still is very much focused on experiences over things. and then uncertainty in the global environment as well. So overall optimism in terms of the consumer, but definitely a very cautious tone. And I was surprised, I kept checking the headlines, I was checking the ratings, and I haven't seen a single analyst move in reaction to this call or in reaction to these earnings.
I'm so glad that you both mentioned this, because I thought I was seeing an error. Like, I was like, I must be seeing like something isn't updating. Like, my system must be wrong, because I was like, this must be
Damn
wrong.
thing's starting to black out on
I
me.
mean, like a $200 average price target. So I'm so glad that we all saw that, because that to me is madness, and maybe just an overreaction to this earnings call. I guess we'll have to see, because you can't argue with price, unfortunately. The move is what the move is, and I was seeing this number. I mean, like the report, I like you said, 86% revenue growth, but regardless, the move is what the move is. So appreciate the insight. Unfortunately, what is a down day substantially for PDD Holdings. Caroline, what?
Randy, you still here? I was just going to ask you about your SPY if you're pissed. I hate losing too. I'm going to be looking at this. I'm going to come right back. I got to go do something real fast. But I like this trade. The 110 strike for September 30th. Could give it the 3-day rule. Then we got a triple bottom down here. I love you, Caroline. Thanks for alerting this to me. What I said earlier, I wasn't talking about Jenny. I was just saying you're a much better woman than she is. So don't get mad. I gotta buy some of this. I just can't sit here and look at it like a dingbat. I'm gonna give it a shot. I won't put a lot of money in it. Then if it dips in 3 days, I'll buy more. If it don't work, I'll get out. I'm on 175. I mean, this is too good to pass up. I should have saw this earlier. I would have took that. And we could drop down there again for the 3rd time.
Yes, sir, what? Are you pissed? It just looks like too good of an opportunity to me. And it's oversold. Oh yeah, I mean shit. Easily back to above 100. Maybe even 120. There's some big 1,000 shares, 500. No big selling yet. There's 400 sold, 500 sold, 487 sold. 250. Now here comes the buys. One of these days I'll get enough guts to put 10, 15, 20,000 in a trade. If I did, I'd probably wouldn't be here right now. I'd be rich. This can easily drop down too. We'll just leave it like it is. 152 or 179, so that wasn't too big of a drop. $100. Okay, I got 5 contracts. This is kind of a risky trade, but what the heck. Baba showing clear off the PDD rules news. I wish I'd have known that about that, Papa. It looks to me like they overdid it. So $100 will be the threshold to break. Break that, we'll go up higher. Come see your Papa. Oh, I see what you're saying. It's not a PPD, it's a PDD. Deficit disorder. $189, buddy. 190. Dashing through the snow, making Jimmy stoned. Heading off to Nancy's to eat some ice cream. We're about to break the 1, 2, 3, 4. Jingle bells. Actually, I'm going to just call this a 1. Well, no. Because that really didn't hit that. So let's not. We'll call that a 1. And that's not quite there yet. But maybe it's not perfect. Yeah, it wasn't perfect. It is a 1, 2, 3. Four. If you want to count to 3, you can trade with me. If you're able to count to 4, you just might make a little bit more. And we're not there yet. See, I'm real stickler. But Jim, what do you mean we're not there yet? I've told you once, I've told you twice, if I ain't told you 20,000 times. That body has to touch that body. You extend it to the right, and if that body doesn't touch, it doesn't count. You understand? I do now, sir. I didn't mean to make you mad. Even if it's a centimeter off, I mean, come on, man. It doesn't matter. That body has to hit that body to be number 4. And it's not there. See how much off? Jim, you're off. Oh, damn, I am, ain't I? Sam, you might be right. Uh-oh. Jim, may I have an apology, please? No. Ain't getting shit. It's still not there.
It will be though, Jimmy. Dashing through the snow. So that's a smart idea to play the sister play on Baba. I mean play with, sister play Baba. Break it, baby.
And we got 1, 2, 3, 4 on the NVIDIA. So, PDD's at 1.9. NVIDIA. NVIDIA. $96,000 contracts at 130. I'm watching the video again. I have to end up cleaning this chart. Oh, what the hell am I doing here? There's number 5. So we're going to see right here, man. It has to turn up here or we're going to take a nosedive. Not yet. Not yet. Still number 4. Still number 4. Erase circle. Removed. So, where are they called? We're at 190 and 155. Dang, I could have got that at 145 a bit ago. I have to clean this chart up soon. Hike. Good. NVDA. I'm gonna kiss some ass right now. That's funny. Come on now. They don't want to know this crap.
Man of the Year, sure. Oh, Putin. Well, here we went down some more on the video. Take a nosedive. Randy? Let's look at the SPY. Now I got out of these calls here. Just scalped that real fast. Took it up there. So we had a nosedive. Randy. Tell me what you think, Randy. Hi. Yeah, I think I got Nvidia twice somewhere. SPY. We could easily drop down to 2467 on the video. SPX took another dive here. So I'm going to watch this real close. What was I looking at earlier? Oh, that was NVIDIA. Okay.
I think I'll sleep good tonight. I feel a little tired. Man, it's getting hot in here. I don't want to turn that frickin' fan on, but I'm going to have to. Q's are dancing off the low, but doesn't seem to want to break you out yet. Josh, you ever looked at the TQQQ and the SQQQ? Take a look at them. I know a guy that trades them. He's a multi-millionaire. Rodriguez, whatever his name is. I can't remember his name now. Ooh, Dragarian.
Oh, I've been around for a while now. When I was first on the trading floors in 1993, we were trading 700 and some odd thousand options per day. Now
God.
the average is 48 million. So it gives you a little bit of an idea. It's just been a growing part of the market, and I think that will continue to grow. These volumes are more than extraordinary. I look at it each and every day. We've been over 60 million on multiple occasions already. So there is something to be said of the use of options, and it's not always just speculation.
Mannequin?
Some of it is hedging. Some of it is trying to give yourself enough.
I'm getting close to my SMCI alert at 551.66. Double bottom booyah. If you got your ears on. Oh yeah.
Investors there for that group?
I think that you've just got to, there's partially your gut, but also just finding out as much information as you possibly can. And we all try to do that each and every day. But there is a lot to be said for that. You got to know what you're investing in. You got to know whether or not it's truly an investment or is this a trade. And obviously, most of the trades within the option world are actually trades, not investments. But we are seeing more and more of it. As a matter of fact, Nicole, it's frequent to see names like NVIDIA and some of the other very big names, Amazon and others, Google, where we've seen a lot of very deep in the money call buying where people are trying to use the leverage and actually using it as stock itself because they're deep enough in the money that that's actually what it's going to move like. We call it delta, and it's going to move right there with the stock. We're seeing more and more of that, so kind of a push away from the stock market and actually moving everything over into the option side.
Right. Pete, it's great to see you. Thank you so much for being on. Until next time,
I really
Pete
appreciate it. It's great to see you too. It is.
It really is.
Thank you.
You're a hot chick.
Appreciate it. Pete Najarian, Market Rebellion. Coming up next, Options Corner. Tom White is standing by. He'll highlight unusual options activity from the day, how investors are looking to trade on recent news of Schlumberger, now SLB, and Uber, and Snowflake. We'll be right back.
Falling wedge, way to take the trade. Falling, falling, it's falling, yeah. Falling wedge, way to take the trade. It's a fun wedge. Wait. Oh yeah. Jim, you were watching it at the 1, 2, 3.
Empower your portfolio with the Schwab Network.
With the Slob
Available
Network.
anytime, anywhere, on any device
The
for free.
561 strikes.
Schwab Network.
I missed my opportunity. I was watching that. Should have, would have, could have. It's definitely a falling way.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
These are the 561s.
Welcome back to the watch list. I'm Nicole Pedalese. Time for Options Corner, where we analyze unusual options activity and trades that we are seeing
You
throughout the day.
are going to get
Tom White is with us, host of Fast Market here on
moved
Schwab Network.
over
SLB
here.
down over about 10% this year, higher today. Oil's been higher. You found a bullish trade on this name. Some of your thoughts.
Yeah, a lot of the energy names doing pretty well today, Nicole, based on the fact that crude oil is up over 3% here. And if you look at SLB, the former Schlumberger, their last earnings report, they beat on EPS, they beat on revenue. Their margins continue to expand. International business picked up also. They just got a contract from Petrobras down in South America to develop a couple new oil fields in the Santos Basin. So a lot of things going right for this company. It always helps when you got the commodity that this oil services company relies on going to the upside. Seems like we've bounced off of that $70 to $71 a barrel level multiple times recently, and you're seeing a spike, as I mentioned, up over 3%. Now, saw some unusual option activity, and typically we don't see a lot of options trading in SLB on a daily basis, but this kind of stuck out to me today out in the September 6th weekly cycle. So 11 days to expiration here, where trader bought over 10,000 of the 46.5 strike calls. They paid an average debit of about 54 cents, so that break even for this trader where he starts making money over the next week and a half. 47.04 is about 3% above the current share price in there. As I mentioned, we typically don't see big positioning, big open interest positioning in this name. Call volume about 3 times normal daily average volume that we've seen over the last 5 trading days. So yeah, with oil up, seeing all the energy names up, it's leading in the S&P 500 sectors. And this trader thinks SLB over the next 11 days is going to continue to rally.
Yeah, it's interesting because I did see that UBS on the 20th actually put the 63, let's see, price target to 63 from 67. They maintained the buy rating, but they brought it down a bit. I did see Piper Sandler had $58, so they do see upside potential, and they still are positive. So we'll continue to follow that as you point out, a bullish options trade there. How about Uber? When we look at Uber, it's up over 15% this year. Some trouble with Dutch regulators. That's been something. The trader that you found that's looking at this particular trade is bearish.
Yeah, and I'm not sure if this is speculation, just taking a cheap shot to the downside, or unusual option activity where they're hedging maybe an existing long stock position, because it seems like this $75 level in Uber has become a big resistance point to the upside, falling over 2% today on the back of that fine. I think it's about roughly about $320 million in U.S. dollars, 290 million in the euro. This fine out of the Dutch Data Protection Authority failed to appropriately safeguard the data with regard to transfers from European taxi drivers, holding a lot of that information in servers here in the U.S. So that's a concern. And you have to wonder, is this going to be a domino effect in a lot of these European countries that have higher regulations than we do here in the States. Is this just one of the first of many? Although Uber did come out and state that they no longer do that as far as data protection from their overseas entities at this point. General Motors and their cruise unit, Uber just signed a deal with them. Uber and Coco, they have a strategic partnership that was just announced today, where their delivery robots are going to be, going around in San Francisco, and they're looking to expand in that space. S&P just raised their credit rating on
God, 127
minus to BB plus. So
how'd that happen?
This company as Uber Eats continues to expand, and then ridership.
Are you kidding me?
Continues to expand, but we did see have some unusual option activity to the downside in this one. On the October 4th weekly series, trader bought 7,000.
Oh, okay.
65 strike puts. About 58 cents on those. So that break even of 64.42 over the next 39 days, about 11% below the current share price in there. Puts are out trading call.
Shut up. Can't you see I'm in a trade? You're worse than a call center. I think I'm going to go to Taco Bell tonight. Found a four-leaf clover, bring this love to you. There's no lucky star. It's a tree where I got lucky. I got lucky when I traded you. I got lucky. Mike's on the mic. Oh, I love Mike. I love Mike. When I met you, Blanket.
Always walk around with all my fingers crossed. I'm afraid the love I found
Just might get lost.
So won't you tell me that you love me? Hurry up and name the day, and then I know that my good luck is really here to stay. Oh,
I got lucky. I got lucky when I traded you.
I always walk around with all my fingers crossed. I'm afraid the love I found just might get lost. So won't you tell me that you love me? Hurry up and name the day, and then I'll know that my good luck is really here to stay. Oh, I got lucky. I got lucky. Yes, I got lucky. When I found you. I found you. Oh, I got lucky. I got lucky. Yes, I got lucky. When I found you.
Boom.
We want to take it to VWAP. We're at 125 YouTubers. We're going to try to take it to the VWAP. My PDD's back. It was almost hit $2. It probably did.
Openings, but keeping it sort of fresh for people. No pun intended. The food's very fresh, but you know, like when you think about steak and how well received that has been, you know, the innovation being a big part of this.
Absolutely. So as you mentioned, we launched steak on June 3rd, and steak was a perceived gap in our menu. We didn't have a beef item. So after 7 months of testing, we felt really excited about the opportunity to bring a beef option steak to our consumers. It's an amazing blend of Mediterranean spices grilled in our restaurants, and it's just performed beyond our expectations. So our steak incidence grew 20% from test to market. Our guests are loving it and enjoying it. It's my new favorite go-to bowl, and I had it this afternoon for lunch. But innovation's so important, making sure that we bring new things to our guests each and every day to keep them engaged and interacting with the brands. So doing that, as well as you mentioned, opening new restaurants across the country. Opened 18 in the quarter in many new markets. Plan to open 54 to 57, which is about a 17 to an 18% growth rate. And it's all in an attempt to deliver great returns, but also bring Kava to more and more people as best that we can. It really reminds me a little bit of recently I went on a trip to Greece with my family. We came back, and it's just amazing what you can experience there. And our founders have really just created something super special where they're trying to take what they learned and knew about in Greece and bring it here to many more consumers, and I'm excited to be part of that.
Yeah, without a doubt. I had the opportunity to meet them. I'm also Greek, so I know exactly what you're talking about. You know, I think about also just some of the challenges and headwinds. It's, you know, you've seen so many positive things on your balance sheet, right? You talk about same restaurant sales growing 14.5% basically. That's down from the 18% roughly, but it's still incredible growth. You're also seeing same-store sales outpacing views, the 8.2% increase. These are some great numbers. Are you not worried about inflation, labor costs, the consumer maybe starting to pinch the purse a little bit, recession, unemployment? You know, what are some of the hurdles that you guys talk about?
Yeah, certainly when we shared our guidance for the rest of the year, we increased our same restaurant sales guidance to 8.5% to 9.5% on a full year basis. And that reflects a double-digit sales growth in same restaurant sales for the back half of the year. And certainly that is the strength of what we're seeing in the business. But to your point about risks, also reflects the uncertainty in the macroeconomic environment and the upcoming election and the impact it may have. So we're always wanting to make sure that we're planning ahead, always looking at what the trends are and making sure we're responding appropriately. As you mentioned, inflation, our supply chain team does an incredible job partnering with our grower rancher partners across the country, understanding
Let's do it, Mike. You still in it?
Anything we can do to be more efficient so that we can mitigate any increases that we might see as much as possible, because we want to drive tremendous value for our guests. And so by doing that, one of the things we've done is not raise price very significantly. And so to the extent we can manage inflation and any other headwinds that may present itself, it gives us the opportunity to reinvest in our guests through lower pricing and also into our team members through better wages and benefits.
Yeah, and what did I leave out? I want to make sure I didn't leave out anything that you wanted to note. I mean, it was very interesting to see the changing of the guard for Starbucks, for example, right, with Brian Nickel heading over there.
Oh, I got to watch this.
It's very interesting to see what goes on to try and remain competitive in this industry. Anything else that you want to comment on or that I didn't hit?
I think the most important thing is a big thank you to all of our team members, more than 10,000 of them across the country, and what they've been able to do for Kava and our brand as they serve amazing cuisine and with incredible hospitality each and every day. We couldn't do it without them.
Break it.
Yeah. Good
You see this here,
Tricia. Thanks
YouTubers?
for coming on the show always. We love having you. Thank you, Tricia Tolliver.
YouTubers, we got two exit ideas. If we break this resistance, we're squeezing right now. We're on that 63 and 21. You know, I like to watch the moving averages, see if they cross over, if that has an effect with pushing these stocks up. So we got the 20, we already had the crossover here of the 9 and the 21. Then the 921 crosses the 50. The 9 crossed the 63, and we need this 21 to cross the 63 to push us up to the 200. Now on that other chart is the VWAP. And we could get it to 561.53 if we break this resistance. But on the way up, we have a triple bottom right here. So we want to put our price line across that triple bottom. And that's going to be a hard resistance to break. We're going to put a trend line, not a price line. And extend that out. So 560 something. Oh, here we go. 560. Oh, 85. There it is. I mean, shit. Get it. Get it. 144. 144, baby. Perfect. Perfect. I'm going to draw this up. I'm going to show you what I just did. Now, this is just a scalp. Scalp lasts no more than 30 minutes. After the 30 minutes is gone, there it is, right here. They got right to the penny. So Jim, you were talking there for a second, and you had me going with the price line. Then you said trend line. Why'd you say that? Well, it goes all back to the bodies again, right? Do you want to measure up that body to that body, that lowest body? You couldn't take a price line because that would have been off. You'd have been a little bit higher than that body. So you bring that body down. You want to get it to the penny. Bam. It don't get no closer than that unless you're using baking soda in your refrigerator because you store too much mold in there. Now you're above the 200 on the 1 minute, which means you can go higher. We can take us higher. Now you got a head and shoulders right here. You got your left shoulder. And you come up here and you create your right shoulder. 10-4. We don't know where it's going to be, but I'm going to run that shoulder line from that point of the body to that body right there. So that next resistance channel is going to be up there. But I got out of the trade because I know a triple bottom is a hard resistance to break. And actually, that's not right. So we're going to redo this here. Bam. So definitely when I come up through there and pierce that triple bottom, I'm looking for chart patterns. I'm looking for candlestick patterns. So I know a triple bottom sometimes can be a great support. And if it breaks through it, it can be a hard resistance. This is a fallen wedge. Not by much, but it is. And that's the snake. Triple bottom. I don't know if, I'm just reading what I see. Everybody sees artwork. I used to sell artwork. And I'd ask people, what do you see? And it seemed like I always got a different answer. Unless it was somebody that wasn't familiar with art. And they'd say, oh, that's an outdoor scene, or those are mountains and a river. And others would see other things inside of that painting, like Bob Ross used to do. I used to sell Bob Ross's paintings.
he came in my shop one time in Sedalia, Missouri.
Fascinating.
Yep. Damn, I wish I'd not got out by now. Because we're going to take it to the VWAP at 561.52. I got a picture of my shop. I'll show it to y'all. Watch out for the overhead resistance. If I got it in here. If I don't, I'll take a picture of it. I got it in a picture frame. Oh, I know I had it in here somewhere. Yeah, I might have to take another picture of it. It's a funny thing, I named my picture frame shop Picture Frames Plus. And when I sold it, I moved to Springfield and worked there about 10 years in an art gallery, and then decided to quit and move to Hawaii. And there's a job there called Pictures Plus. I just thought that was kind of neat. I had Picture Frames Plus, and his name was Pictures Plus. Tape's looking good on the spy right now. And that was good. I like that. Oh, God, I love you. That's a woman right there. I think they're a lot better to look at on this channel than they are on CNBC anyway. I can't stand looking at liberals. I used to love it. They were so easy. Oh, we got a hammer. This could be a swing for tomorrow. Conservative women are hard to get. But when you get them, they're just magnificent. Did you see that mannequin? SMCI got a hammer. All this running round. Yeah, I said it. Look at Kamala. Especially when I stream it. It is a form of art. You see, I'm drawing trim lines and patterns. I thought about selling paintings of candlesticks. Become another Hunter Biden. Yes. Would you like to buy one of my paintings? It'll be $5 million, and I'll make sure that we buy your oil. I guarantee it. Daddy will let you do it. Mannequin, hammer. You know. Okay. Not again. Damn it. Okay. This ain't right. What the fuck? Yes. Oh, continue. I have a feeling I'm going to have a cow here in a second. Okay. Yeah. This thing's freezing up on me, so we're going to do this. We're going to shut this baby down. This is twice today. Could be the internet problems, but every once in a while I get... Man, I went a couple days without the internet. I don't know if it was last year or something, but it drove me nuts. It's going to take forever to shut down. Come on, hurry up. This will take forever. While I wait, there it goes. Hurry up, you stupid. Jimmy does not like to be slowed down. This could cause somebody to get real hurt. Come on, you nincompoop. Okay. No, this guy says NVIDIA will explode, profits will rise 150%. I gotta listen to this here video. Who is the hell is that? The Man of the Year? No. You got that wrong.
And women's Noble pants are 20% off.
We have the Dog Skiver too. When you buy a large bag or more of Phil Science Diet dog food.
I'm looking at the notes here. Well, I'm good. I'm not as good as you think NVIDIA is going to be, though.
See these bastards.
I mean, these are not typos. You think?
CNBC cannot stand NVIDIA. They pumped this stock for 3 freaking years every day. All of a sudden, they're totally against it. It makes me more than mad. When I'm bullish, they're not bullish. Buy signal.
In 2025. Yeah, like I know you talk all the time, Scott, to people like Stacy Raskin, who says, this stock is still cheap.
It is.
Yet nobody seems to believe it, but
I do.
Numbers over the last 5 years, NVIDIA's average look-forward price-earnings multiple has been 40 times. Yesterday, after this 2-day correction, it was 39 times forward price earnings. But there have been 3 times in the last 5 years where
it's the market cap. They freak out on the market cap of $3 trillion. As far as I care, CNBC can shove it up their
so we just
crack hole.
Seen that euphoria yet.
It didn't just pull back at those times. It got destroyed.
Jackson's projections
because you idiots were pumping
were
it
to trade at 65 times its forward price to earnings ratio. The company's valuation could skyrocket to $8.5 trillion, with a per-share value of $340.
It got destroyed, yes, a couple of those times. So, this is a high flyer.
Oh, that was a low blow.
Expectations can reset on a.
I can't. Oh.
It's the euphoria hasn't yet caught up in terms of the go forward multiple. I think what's going to happen in the second half of this year, as people
Clark,
start to see
CLSK 1234.
selling, how good the gross margins are on those.
In another interview, Eric Jackson has made a bold prediction regarding NVIDIA's stock performance.
Fuck, what are they doing to this guy?
$250 per share by the end of the year. This projection implies a potential
This ain't right. This is not right. This is not right.
Corner, their next generation after that.
That's a bunch of
We'll
bullshit.
start to see that euphoria reflected in a lofty go forward price earnings multiple, and if that happens, this thing could go to $6 trillion market cap.
You don't think they're over earning at all right now, just based on the flood of orders? They're kind of the only game in town.
Duh.
Expectations can reset on a bad earnings report, but they can also get equally overhyped on good news. Despite the enormous run the stock has had, the euphoria hasn't yet caught up in terms of the go-forward multiple.
What are they doing?
Selling to these big hyperscalers
I don't know what they're doing, but I do not like this at all.
for these chips to sell to everybody on the planet. So they got to prioritize. Why wouldn't you prioritize to these hyperscalers who are putting in orders, as large as they possibly can to lock up as many of these chips that they can currently get their hands on, the H100s, H200s.
That's
That's supposed to be a bad thing. That's
Plastic-
supposed to be a sign that,
Incoming orders are like huge. What is?
As August 5th, the stock was trading at just 17x forward earnings. These volatile names have the best returns, but you have to live with the 35-80% drawdowns.
years down the road. So they've got.
Oh man, that's a low blow. I'm gonna complain. I can't believe they're doing
in
this.
front of them to keep running towards the touchdown. Nobody's catching up to them. And there's just a bunch of lazy linebackers behind them. So I think it's years away from that happening. They're gonna take advantage of that lead that they have.
Jacken told newspaper
it's not
CEO
expensive.
Jensen
You know,
Huang he must
Kosu
signal
had
that
an
reported
earnings
delay.
You got to be kidding me.
Cisco in the
If he
Someone
can
else-
afford that,
Back then,
Nvidia may be on a
Cisco
path
Okay.
to $4 trillion
PE
market cap.
multiple.
I see what's going on here. I thought CNBC was doing that. No, this guy's doing it. Lion of Wall Street.
Despite Wall Street analysts' bullish long-term outlook on Nvidia, Jackson acknowledges that positive sentiment does not.
I ain't watching this. That pisses me off too much. I'm glad am I subscribed to this? No. I will not subscribe to that idiot. I got bad taste. Sorry about that. I thought CNBC was making all that mumble jumble. That was really going to really upset me. I can't watch it now. None of it makes sense. That threw me for a loop. Mike, you still have any of them volumes left? Oh, God. Jim, you went haywire. Dang. I know they're bearish. I know that for a fact. Dang. Because that made no sense. I would do a video like that. You lose concentration, you can't listen to the guy talk, for one, and get his point across. But he's bullish just like I am. It's cheap. He's a price action trader. These other guys are fundamental traders. I'll go against any fundamental trader in the world when it comes to trading stocks. The best you can find. I traded with this one. I was new to this room. This guy comes in. I mean, he's supposed to be one of the top dogs in there. I called out NVIDIA. I called a falling wedge. He says, he says, no. I said, what? That's not a falling wedge. Ten minutes later, I got $400 a contract on it. He's never been back in the room since.
It's all fake news. It's phony stuff. It didn't happen.
It did happen. Man, that threw me for a loop. Made me miss power hour. How many people I run off on YouTube there? Hey, Mike, go on that website where you see how much I average per day on YouTube. What was the name of that website? When you get a chance. I'm thinking about monetizing and have another political channel. That's why I'm going to get a Joe Biden mask. Got a lot of fun. I can have a lot of fun with Joe Biden. Kamala Harris, too. So this is a double top. Might do a Trump. Socialblade.com. There's 0 results. No, that ain't me. Yeah. I can't find it. Oh, we got a Fig Newton in the room. Time for a commercial break.
Big Fig here with that great new dance, the Newton. Hit it, Hal. Gooey, gooey, rich and chewy inside. Golden, flaky, tender, cakey outside. Wrap the inside in the outside. Is it good? John Tootin' doing the big Fig Newton. Here's the tricky part. The big Fig Newton. One more time. The big Fig Newton.
Welcome to the room. Bet you've never had an intro like that before. Double bottom, double top. That thing's about to go out. God. It's getting worse.
I'll be back.
I would have took that trade if that thing didn't come on. SMCI. No, I sold my SPY calls at 144. Mannequin SMCI had a nice little pop. Yeah, I got a little crazy on that CNBC broadcast.
Cut within, cooler heads started to prevail, and the market shifted back to just a 25 basis point cut, which I feel like the market interprets anything more than 25 basis points as the Fed suddenly playing catch up, and maybe they've gotten behind the curve. I saw somebody on one of the business networks calling for an emergency 50 basis point cut on August 5th. Is that not that's ridiculous.
That was getting a little crazy there.
Yeah.
But it seems like to some extent Powell's kind of left the door open to that if the data go awry. I mean, he seemed like a man pretty ready to pull the lever.
Yeah. No, we're definitely going to get a cut. And I think the Fed would prefer, and I think the market would prefer a 25 basis point cut as well. I do feel like if that number moves back to closer to 50 basis points than 25 basis points, and I've got it, I probably use a little different methodology than you, but I've got 32 basis points right now, which means it's leaning more toward 25 than 50. But if we get some sort of inflationary type number this week or next week, I wouldn't be the least bit surprised if if you can pull some inflation out of the employment number, which we get next Friday. If wages look like they're going up, et cetera, it's very possible we could spike to 50. And if it looks like we're going to do a 50 basis point cut, I don't think stocks are going to react very well to that, because I feel like that's what drug us lower before.
Fair enough, yeah. All right, so you still see SEP as basically a more volatile event likely than October, so that kind of vol dynamic, I see the argument for that, for maybe entering long vol through September. And your idea is basically even going as far to like short October vol to play that spread even more?
Yeah, I feel like that spread hit over the last 4 or 5.
Randy, I was in that trade down here and sold it on the way up to 144. It's falling when I called the falling wedge. And got out right a bit. I think it was right around there. I don't forgot where I got out at. I guess I can look at the time. PDT's dropped some here for me. Yeah, I'm not going to eat much tonight. I feel full. Eating these peanuts, walnuts, almonds. Think so, Newton?
Maybe I'll take a look at the at-the-money straddle on each of them, but I would bet, I'll bet you a paycheck that the implied vol of October options is higher than September right now, just because of because of the what we're looking at with the November election.
Love it. All right.
What do you mean?
Very fun conversation. Very useful.
What are you looking
Excited
at?
in what you're doing. The Professor Trader. Thank you very much, Russell Rhodes.
He's the first one.
We'll see you. Thanks a lot.
Sure thing.
He's the first one out of listening to these people for months that put that election fear in the trade. And I've been doing it for a little bit. The way they talk on Wall Street about Kamala, she's not going to do half of what she says she's going to do. They don't believe they're going to do the price gouging. There's some other thing that she was going to do that would be devastating to stocks. That's the way they think that Democrats have a way of suddenly changing their mind when reality hits on a lot of the stuff that they say. It's like right now, 3 years ago, I was against fracking. Now I'm for it. 3 years ago, open borders. Now they want to close it. So when they get elected, then they're, yes, we're going to stop fracking. Yes, we're going to stop drilling. That's the way Democrats are. They all know this. We're going to price gouge. They ain't going to price gouge nothing. It'd be devastating.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I got to clean this chart up.
Let's prep for some more of the tech reports coming out this week. NVIDIA, of course, the highlight. Jason Ware joins us, CIO at Albion Financial Group. Gonna also fit in some of our other big names this week, like Salesforce. Jason, good to have you back. So NVIDIA, it seems like reading your notes that you were scooping up in the last couple weeks here. How high does that raise the bar? What are you looking for earnings?
Yeah, good to be with you. So obviously the important question around earnings, at least as far as we're concerned, is looking at the magnitude of the beat, because I don't think there's any question that NVIDIA is going to beat expectations when they report on Wednesday. And look, to give you some kind of context to what that means, if you go back a year ago in 2023, I mean, this was a company that was beating, just smashing earnings expectations by 20, 30, 40% per quarter, over and above what Wall Street was expecting. And then analysts have since kind of caught up to the story, right? We all know why NVIDIA is so hot. We know why their business is growing the way that it's growing, right? It's AI. And that hasn't changed, but the growth rates have started to come down. And I think the ability to beat the bar has gotten a little bit tougher. We're looking at probably an earnings beat somewhere in the order of 5 to 10% as opposed to that 20, 30, 40%. So again, expectations relative to actual results. And then second, and just as important, in fact, more important, because we're looking forward on this one, is, what should we expect with Blackwell? There's been a delay there. The question is it demand deferred, demand destroyed, or anything in between? Our take is that despite the delay, there's still a lot of demand for their chips, and Hopper is almost as good. So we expect to see a good quarter there, and probably some encouraging comments around where Blackwell sits for the next couple of quarters.
Think they need to surprise on the guidance, Jason, or is the standard at this point just to
Unrealized
come
gains.
back to the pace
She ain't gonna
that was
do that shit.
expected before the reports of the Blackwell delay?
Yeah, it's a good question. Look, I think as investors, we need to all reset our expectations. I mean, peak growth for NVIDIA has passed. There's very little question around that. They were doing 100%, 200% revenue growth, 400 and 500% earnings growth. This is probably the last quarter of triple-digit growth. Next quarter, we're looking at 75 to 80% growth, both on the top and bottom line. So guess what? That means margins have also hit peak. We're thinking gross margins probably settle in here, maybe in the low 70s over the near term. So really what that means is like the company's still growing at an incredible pace. Do not get me wrong there. This is a fabulous growth story, but we have to get a little bit more real on expectations. So yeah, the guidance is going to matter, but I do think the expectation of normalizing growth within the context of AI is what we should expect. Again, 75, 80% next quarter, probably settling into the 50s and 40s in the out year.
Okay. So the plan for NVIDIA as an owner then, do you have like a valuation limit in mind? We say, okay, if it gets this expensive, then I take the profits on kind of the speculative fervor, if the earnings get to a certain point, or is NVIDIA truly just, you're going to hold it and you're only going to add to it over time?
Yeah, so, we bought it around 100, as I mentioned earlier this month. The valuation started looking really compelling to us. It's trading around 30 times forward, over the next couple of years, where we think margins are fairly stable and growth is still really strong. So that made a lot of sense to pick some up there. Quite frankly, we were hoping it would go lower. This bounce, it's up 21-ish% since we bought it. It's up 30-ish% off of those intraday lows. On the August 5th. So, look, I would have liked to have seen it come lower, actually, being completely honest with you. Given the bounce we've seen over the past 3 weeks, I think expectations going into the earnings report are probably a bit higher than we'd like to see. So, look, if we get a pullback here, I think around 110 makes sense to add to the position. We have a smaller position than we would like to ultimately own as we look out over the next 3, 5, and 10 years within the context of AI and just how well NVIDIA is positioned in that market. Not only with the chips, but the things to come. So we still like it. We'd like to see that on a pullback, though. We probably would add to it if we get such a pullback.
All right. Good stuff. Okay, understood. How about for software? If we go to Salesforce for a second, a giant in its own right, but has been a very different trade all year, basically. What do you think, Jason?
Yeah, so the company's beat on both top and bottom line for 3 straight quarters. Nevertheless, you have to remember that there was an enormous EPS growth story happening in 2023 and for the first part of this year on the back of expanding margins. To give you some context to that, back in 2022, the operating margin for Salesforce was about 2%. In 2023, it went to 6%. And now we're looking at something on the order of like 17% over the past couple of quarters. Point being, we've seen a big cost focus from Mark Benioff. We've seen a huge explosion in EPS growth. So as we back out the aperture and look at it a little bit more medium and long term, this is still a great secular growth story. They've been compounding top line by about 15% a year over the last 5 years, bottom line about 25%. We don't expect that over the next 5 years, but we think it's probably a 10% top line story for longer term investors. We have a bit of an air pocket here in terms of demand. Every CTO in the country is focused on AI and not so much enterprise software and cloud. So there is an air pocket here, and I think that it's going to be potentially a mixed quarter, but we still like the company and the stock as we look out over the next couple of years.
Okay. As we think about cloud, is it going to be a more direct game of winners and losers? I feel like there's been quite a bit of dispersion in this group, as opposed to, say, semiconductors, where everything just kind of moved in the general direction of NVIDIA for the most part, save a few.
Always clean as Jim,
Yeah,
man.
good question, good observation. Kind of the way that we think about cloud is there's the hyperscalers and then everyone else. If you're a hyperscaler, which is to say your AWS, Amazon, or your Azure, Microsoft, or your Google Cloud, or your Oracle,
You got this call
continues to be a
monitored?
cloud story that you and I have talked about for, boy, I feel like it's been 18 to 24 months now, is this kind of sleeper play on the cloud and AI. If you're any one of those businesses, your business is still doing exceptionally well. You're growing between 15 and 30%. And I don't think we should scoff at those types of growth rates because they're stable, normalized growth rates. Though some of those stocks have pulled back, 10 to 15% off of their highs. Oracle's doing a little bit better than the others, I think in part because of valuation. But we are still very much bullish on hyperscale cloud. We think we're probably in like the 4th or 5th inning in AI workloads moving to the cloud. Make that secular growth story even longer in terms of how long it takes for this to play out. We still like these over the 2020s as we're looking here mid-decade and beyond. So still companies you you can own. They're not pure play, right? Because Amazon's also an e-commerce and digital advertising company, and Microsoft's an we can spend an entire segment on each one of those, but we still like the hyperscalers, and in particular Oracle. We think looks compelling at this level.
Great stuff. All right, I like that. Good to know. Thanks, Jason. Good analysis. Really good fundamental work there, laying out the case for some of the tech trades ahead of this week. All right, Jason Ware, Albion Financial Group coming up. Let's trade some options. And the S&Ps, let's look at the key levels for this week. Gamma flows and positioning with Kevin Green next.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex, around-the-clock market access, even when equities markets are closed. All on our award-winning
Jim?
So no matter what or when you want.
Do you see an inverse head and shoulders on the SPY, or do you think you're just going to... This is all based on... The market reaction is all based on about NVIDIA. No matter what CNBC says, they've got their... in a wad. CNBC can't stand NVIDIA right now. I do not understand why. Because I do understand why. Because they said, well, the market cap's at $3 trillion. It's like, who gives a crap? The orders that they think that there's going to be a slowdown in orders. Yet they're still number one. Everybody wants this Blackwell chip. It's supposed to be like 1 million times faster and everything. They need it for AI. So they got these big orders, and huge orders. And then you got the market cap at 3.1 trillion. It's way over there. They're stuck on that market cap. And all they're doing is they want to buy it cheaper, and it's cheap. Cheap as I've ever seen it in years. But they're looking at the fundamentals again, you know. One guy comes out and says he's waiting for a 25% dip. He won't buy it until it dips 25%. On CNBC. Some weird looking dude from somewhere, not here. I think I posted the video in the room on it a while back. The only few. Dan Ives is very bullish on it. This guy we just spoke to is very bullish on it. I'm very bullish on it. They were bullish on it, and the thing didn't move for 7 months. It was going to break 500, and I said, it is not going to break 500 this year, so get it out of your freaking heads. And then the first of the year came, I said, message Kramer, and I said, Jim, now's the time. I waited 7 months for this off your alert. You go to 475 and it dipped to 400 every time, 3 times. So I don't know. I could be wrong. But we're getting close to that election too. They might have that in the back of their head. Oh, this guy's talking smack again on the SPY.
Level that we're going to see, which is going to be around 55.50.
Okay. Kind of a tough little pattern there, right? Head and shoulders right in the middle of kind of a dealer pressure level. It's going to take some work, I guess.
Exactly. So this is going to be a battle. And actually, if you kind of look at that chart, I mean, it goes back 5 days. And so since Wednesday of last week, we really have been battling between both at 5630.
I'll give my analyst on it in a second.
Level, and we haven't been able to break out. Now, you can say that's a consolidation pattern. Maybe we are just trying to figure out the right price and the right valuation for the market at this moment. Maybe we have to digest some information before we can actually move higher. But the longer that we kind of stay in this compressed type of range here, especially when you're seeing down volume actually increasing, at least for today, when you're looking at the down ticks, you have to have a little bit of caution there, because when you're looking at a 1-year daily chart, it does appear that we could be forming a double top pattern where we could actually fail and try to test those near-term lows that we had around 2 weeks ago.
And the context, of course, today being that the NASDAQ is making a lower low than last week. So the NASDAQ's kind of like rolling over a little bit to some degree after we made lower highs. Now we're making lower lows. So S&P head and shoulders, even though it's not ideal, hasn't broken the way NASDAQ does. Kind of suggests maybe it could. So then if we look at the open interest levels, KG, like if we do get more rollover in S&Ps like we're getting in the NASDAQ, where are the key support levels? Maybe we start our conversation there.
Yeah, so the key support obviously is going to be 5,600, and actually when you're looking at this distribution, it's 5,690 or 5,590 to 5,600. So you're kind of like your sell-off trigger level would be 5,590 if you're looking at the S&P 500. But if you notice, there's literally nothing under that. So there's really no support structure there, and that's what you get a little bit concerned about, especially when you have a low VIX. VVIX, for the most part, continues to stay elevated. It's not moving in the same fashion as...
I'm going to evaluate it different than he does.
When you kind of break it down, you're looking at 50 to 75 point gaps to the downside there.
God.
Whereas the upside, if we actually had more room on this open interest chart,
Talking about a double bottom.
would show up. It's just not showing up on there right now. And once again, throughout the week, this is going to fill out. We're going to have new trades being placed. We're going to have new hedges being put in the market. We have PCE. We have initial claims. We have GDP. There's enough there to make the appetite for hedging and also speculative upside flows.
That's a head and shoulders.
But it is a little bit concerning that it's this anemic starting off the week. And that's one thing to just kind of highlight here. It'll fill itself out. But the downside risk,
It's not anemic.
we do break these key levels. The downside risk.
We had a new high today,
75
you idiot.
points, then we could hit another level, and then there's another 50 to 75 point gap to the downside. That is not a good environment for us to be in. We want to continue to move higher, keep.
We have higher lows.
And unfortunately, I mean, it does look like the put side, at least for Thursday and Friday of last week,
And a new higher high.
have been getting into those hedges, have been picking those up a little bit more than what we've been seeing on upside sells when it comes to calls.
Understood. Okay, now, Kevin, at the same time as the seems like dealer participation is a little bit light, a little bit lower liquidity. It seems like our other measures of kind of similar effects, right? The CME liquidity kind of contracting a little bit, so we're thinning out a tad in this area.
Yeah, and it's nothing to be too concerned about yet, but if the trend continues, this is
He was right about the $75.
See this trend. If this trend continues, then what you should expect is a gap market where you have these wild swings and intraday swings of 15 or 20 points in a matter of 5 minutes. Those are really not healthy. That is actually another signal that we might be seeing a near-term top, or we might not have enough buyers stepping into this market. If we put it into context,
Not the way CNBC talks, you won't.
we're at right now, it's around a 40% drop when it comes to liquidity. Last week we were sitting at around 45, 47 contracts on the bid and ask on average. Right now we're sitting at around 27. If that trend continues and we start getting to 20 and 18, that's where you probably could say, oh, all right, well, I need to be a little bit more cautious here. This is more than just seasonality. And we could actually see the same type of trend happen on this chart, obviously 2 weeks ago, 3 weeks ago.
What is that?
We started seeing liquidity draw down actually before we saw the market.
CME liquidity tool.
Kind of a leading indicator, a complementary indicator of near-term weakness in the market. There's a lot of bull cases out there. I would say this is more of a bear case to be watchful of.
All right. Sounds like this start to the week could have gone a little better. NASDAQ faded.
No, not really.
Drag. Liquidity kind of coming a little bit light to start the week. And
It was expected.
Head and shoulders that we got to battle through with some resistance ahead. Thanks, KG. All right, good luck here. And S&P start to a packed week.
Okay, my opinion. You heard what he had to say. My opinion is we're just waiting for earnings from NVIDIA. This is a big deal. These earnings coming out is the biggest earnings since I've been looking at NVIDIA. It's the most important by far because, and I've said it last year, I said sooner or later they're going to not be selling as much chips, but man, all these new orders coming in for billions and billions, 10 billions from one company, and just this Blackwell chip. If they can't get it to work, that'd be a huge problem. But we're talking about something that's multi-fast, a million times faster. And you need it for this AI, for what's coming up. So it's the most important earnings, anything that to trigger them to make them happy, like, well, sales have come down a little bit, or more delay in the chip is going to be a problem. They're going to love that. And they'll get their 25%. That's what they're counting on. And I'm going to just load the boat if that ever happens. I'll put 3/4 of my savings in there. But we're getting so close to the election, too. You got that catalyst in the way. Me and one other person said that since I've been watching this TV show and the other one. I think it means a lot on how the market reacts. I remember when they thought Hillary was going to win. So they were all counting on the big bounce in the market.
Device for free.
Right then, that day.
Schwab Network.
Come in the next day and Trump won. The market tanked for a week or two. And then finally started coming back up for a buy signal. But I was watching that real close because, everybody thought she had this huge win over Trump by 50, 60 points, that he didn't have a chance. I remember going and voting for him. I couldn't believe the people that showed up to vote for him. And it was hard to believe that Hillary was going to win it because she's hard to get along with. She's already has a track record of Watergate, getting fired from Watergate, and married to Bill. We didn't want him back in there. That was her biggest problem. She's still married to that piece of shit. She'd probably be president if she would have got a divorce. But she's too damn stupid to realize that.
In both directions these last couple of weeks.
Yes.
It seems like there's no real experts on this subject, Scott. It seems like market can't, market has like these kind of binary flip-flops every other week about what's going to happen.
Yeah, no doubt about it. And, if you were to remove the geopolitical risk, which there's always some risk out there, but if you were to remove that and really just look at the fundamentals of what's going on in the oil space and crude space, you would have to say that demand is just not there. We're getting...
He has a setup like mine.
Summer, we know, Labor Day weekend is a big driving weekend, just like Memorial Day at the beginning of the summer. And then we start to tail off here. So if you couple that with weak demand still coming out of China and other places in the world here, I could actually see a 6 handle on crude if things were really to calm down in the Middle East.
That's an important point because arguably then if it becomes a more economic-centric conversation, then maybe WTI looks a little bit rich right now considering the general kind of direction our economy seems to be slowing in.
No doubt about it. And, for a trader, this trade has been great because of this defined range that, we've been in. Yes, we're popping up against that ceiling now, popping up against, the high 70s, almost 80 level here. And is it going to break through? Maybe it does. But even if it does, an 80 is not a magic number. It's a big round number. It's not a magic number. Even if it does, I don't think it really has a lot of room to the upside unless things escalate there.
Okay. All right, I like that take. Scott, when you think about commodities generally, when you think about metals, gold doing so well, the more industrial connected metals.
3 white soldiers to the 200.
A little bit. Does any of that interest you?
On
is the type
light
of
sweet crude.
firm, like I think about copper, even silver that's done all right. Like any connection there? It seems like maybe not if crude's a geopolitical story. What about in some of the other commodities?
Gold and silver, as we've discussed before, I think is buy that any dip you see. So, we've seen a nice rally in silver action over the last couple of days. Last week, end of the week, we actually saw gold dip down for a day or so. And as we've said, I think that we're still in a bullish trend for both gold and silver. You don't want to buy into it, which is why I've said on any dip, that's what you want to look for. Copper, to me, though, that's a completely different story. I mean, boy, to see where we were just 3-4 months ago to where it is now, and you look at the outlook, you look what's going on in China here, and we know that narrative just flip-flops and changes so quickly, but the outlook in China, demand-wise, does not look so great right now, and we don't know what central bank there is going to do, but I would say where we are right now in copper, even though we've had a little bit of a comeback here, it's still a treading water type of element that we are in right now.
Treading water, Scott, when you think about this week, tell me about generally what gets you excited. I mean, it seems like the commodity stuff is some it's story specific to some degree in crude. Then you've kind of got the macro connection. But obviously this week we got tons of tech too that's going to move the needle. We got Bitcoin getting coiled up. Where do you think the juice is going to be?
Yeah, tons of tech, tons of eco data, really important eco data that we get later in the week, and of course NVIDIA. And I actually looked at NVIDIA here. There are so many people I'm talking to, and so much I'm reading about that.
Okay, that means
the report has to be absolutely perfect, and even if it's absolutely
it's
set up for a nice big drop here.
Well, let me ask
last
you
time
this.
it came on,
To be honest with you, because even though people's expectations are pretty high, there's also that part out there that's saying this thing's going to go down.
Well,
no matter
if
what.
anything, I'm going to have to get you a window unit for a temporary time, okay?
You really think so?
Yeah. Because I don't know how long it'll take him to get one of these in stock.
Data that
So,
is, somewhat covered,
is that okay?
Cool. You get that over the end of the week, coupled with the holiday weekend, with low
window
volumes,
unit,
which is
and
what
then
we see
the
this
first
week
one
and
that you
next
can put
are,
in here.
I think the two lightest
I will look
volume
and see.
days
If I
of
can
the
find one of
year.
those, I'll get one of those instead, okay?
Yeah, I appreciate that.
Yeah, no problem. Let me go to our where we house all that
Live up
stuff
to
in
those
the warehouse.
historical
I'll just
standards
deal
of,
with it.
quiet and calmness.
Okay.
Good stuff. Thank you, Mr. Brown.
I'll see
Appreciate
if I
the
can
chat.
expedite that a
Appreciate
little bit
thoughts.
quickly.
CEO
And see if
Profit
we
Trading
can get
Academy. We'll come back, talk some bonds. To Scott's point, a lot of economic data this week. Good news, needle on
Yeah, I can live with
treasuries. 10-year yields still
I
stuck
got
right down at the tick lows of the year. We'll talk some bonds. When we come back, the Schwab big picture discussion. Colin Martin joins me to set up a treasury discussion. Next.
All right, I'll be back, sir.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device, for free. Schwab Network.
Well, that's going to be fun.
Heck, there's nothing wrong with not having air conditioner. I could probably deal with it. I'll just work out more, work up a sweat. It's 82 in here right now. If it stays around there, I'll be happy. I guess. It's going to take a while. Oh, come on, man. I'll write a song about perspiration.
Market right now. We don't get too much of that this week, but we do get a lot of economic data. I think that's important because if we start to see more and more cracks in the labor market, that has an impact obviously on the broader economy. So I think it'll be important to see, how that second revision to GDP looks. How's consumption looking? On Friday, we get a very important PCE report, but I'd say less important than what we've seen over the past handful of years because, or months rather, because labor market's really the driver of Fed policy right now. But if we were to get a much softer than expected number on Friday, I think that could be something that could tilt the Fed to a more aggressive cut in September, or a trend like that, maybe more cuts in total by year end. But it is going to be an important week, and I'd say culminating with that Friday PCE report.
After last week, I guess, so we've got a little bit more kind of flexibility with how we interpret inflation. We don't have to go into full panic mode if it comes in a little bit warm, knowing he's ready to cut. I guess then does that kind of keep 50 bips alive for a little bit? If things come in really light, then is that where it might get more interesting?
I think so, and I think that's a really good point, Oliver. If we go back to the past year and a half, we saw some really volatile days in the Treasury market when we get those upside surprises with inflation, and I think those are probably behind us. If we were to get an upside surprise, I think most market participants would read that as a blip as opposed to a start of a new trend or a re-acceleration, and it really does come down to the labor market, where if we were to get weaker than expected readings, I think the August report that we get at the end of next week for the non-farm payrolls and unemployment rate, I think that's going to be really important. If we look at expectations there, we're more than a week and a half out, but expectations are for that unemployment rate to come down a little bit. Maybe July was a bit of an anomaly, but if it comes in a lot weaker than expected, and let's say we see a very low number for payrolls, maybe a very low number for the household, the establishment survey, but especially if we saw a tick up in the unemployment rate, I think that would likely tilt the Fed to that 50 basis point decision as opposed to 25 basis points for now. We're in the 25 basis point camp right now, but we still have, 6 weeks or so, or 3 weeks or so before that next meeting. A lot can change between now and then.
Yeah, true. With data, basically the potential for volatility is directly tied to it when there's still a good bit of hope for that 50. Especially when I think, folks, at least I was last week surprised by the degree of dovishness from Powell that seemed to really keep that possibility open. What type of employment tick up are we talking about, you think, would move the needle for him, Colin?
Yeah, that's a great question. I'd say any uptick could be enough to spook them. I mean, just the fact that we're at 4.3% is kind of scary in and of itself. And I think expectations matter. And the fact that expectations aren't for it to necessarily tick up as we stand right now. Again, things can change over the next week and a half between the employment report. But if we were to see a move up to 4.4%, that could spook the Fed.
The way these bears are talking, the SPX, they were talking about it earlier, and he was looking for 5,600 support channel. Negative pressure, intermediate pressure is right around 5630. And positive dealer pressure is at 5650. We got 5700 for the weekly target. That's 100 points. I can't see that happening. Maybe it could double top. But the way they're yakking, we got higher lows and higher highs. Last 3 days, last 4, 5, 6 days. This ain't nothing. This pullback. But it would be ideal if it pulled back to a double bottom on that one candle 3 days ago. And that'd be off the 9, and that'd be added pressure for it to hold. That's at 5,569.11. So that's about a $50 dip. And we could see that maybe into Wednesday. And then the earnings come out and everybody's shocked because earnings were up 110% or somehow I don't understand why CNBC is so negative on this stock right now. I mean, they pumped this thing from 500 to 1200 with no questions asked, and I'm freaking out. Scared to trade it. It's up from the video. It's at 39.23 and it ran up to 140. It was under 100 and it ran all the way to 1200. That's a 1200% gain in 3 years. It was at 1081 after the split. It's up 1400% in 2.5 years. I mean, that's just literally crazy. So if anything, it's because it's way overbought, even though at $100. If they want to use their logic, so when it was at 90, it was like, I guess, a real good buy because it was only up 900% instead of the 12 and 1400% where it was. So I mean, it's definitely, they're calling it a bubble now. It wasn't a bubble when it was at SMCI was at 1,000 and up 2,000%. $34 all the way up to $1,229, $3,000%. It wasn't overbought then. And I'm going, what the hell? It wasn't overbought. Now that we pulled back 50%, it seems attractive to me. 70, 60 some percent. It seems attractive to me. I mean, this thing can pull back to 211 and be healthy and still be up 600% from the bottom. But they won't mention this. They mentioned this from the year began. My book, it's here. Their book, it's right here. Same as Mr. What time is it? 3:01's already broke. Damn, how time flies. 1326, and it ran all to 2,000, and it was probably had a 10-for-1 split. I forgot what kind of split it had. soared 1,200% since adding Bitcoin to its balance sheet. So just, you know what I mean? It's still way too high. Bitcoin worth, they got $8 billion worth of Bitcoin. They own 226,331 Bitcoin. And they're only making 111 million a quarter. Second quarter loss was 200 and, I mean, look at that. A second quarter loss was $102 million. Why in the hell is that thing up 2,000? It makes no sense. None. None. If they want to use fundamentals, they should be bashing the heck out of this stock. It's making no money. What it makes, and then it loses it too. So, I mean, this was way overpriced, my book. If I was looking at the fundamentals. Let me see something else. I got to get out of here. PDD. So I got this swing going on. We did crack 100. So that's good. That's what I said. I want to break 100. So we break 100, we'll go to 105. And I'll get out of the trade maybe, or 110. See, this was a huge sell-off to me. I just saw plenty of opportunity right here. And I've got that 200 SMA. Oh, look at that. New highs after hours. That's going to be pretty tomorrow. 3 black crows. Dang, if I'd have saw that, I'd have added on to that baby. Three black crows with tweezer bottom. So today was, tomorrow I'm going to have a little different approach. I came in here slap happy this morning. I got stuck in, I called a put. If I'd have just held that put, then my day would have been over. You know, it'd have been $1,000. But I sold it for a couple hundred and moved on, and then got caught in them calls and had to work my way out. So I had puts first thing before anybody else did. I should have just kept them. And I don't like the way they're talking about NVIDIA. Everybody, all these fat cats are bearish on NVIDIA. So I guess, you know, I can't fight the grain. I did a video on it, say we could pull back to 118. And we nailed support today. That I called in the video. It's 124.67. I mean, you can't get much closer than that, if you ask me. So I really got pissed off at a guy this weekend. 2 of them. They said my analysis was wrong, and I said, what do you mean? I got a bullish case on it, and I got a bearish case on it, and I'm bullish, and they're bearish. So you got to play with the trend, and then we nailed that support. I was trying to talk some sense into this guy, and he called me a moron. And I don't think you want to do that. I'm still holding a grudge on it. I want to punch him in the face. Right between the eyes. Not in the temple or anything like that. Just right between the eyes. Right above his nose. And then when he said that, I told him to mind his own business. You go on with yours and I'll go on with my business. And then he wrote back, what do you think I am, a child? So you're acting like one. And I got kicked out of there for calling Bob Iger, asking him if he wanted to have a tranny in his movie. And he's leaving. And I did that when Musk called him, when Musk told him to F you at a conference. And by the way, he says right before he started talking, Bob Iger, fuck you, he says. I go, wow. You're telling that to one of the most famous CEOs out there? And now look at him. He's lost his job because he can't do it. They think if you put a new CEO in there, things are going to get better. They do in a lot of cases, but not when you're messing with our kids. Disney has a bad reputation now. It's going to take years for it to get back. So yeah, I think I'm going to do another one on, I mean, there's just, and the guy says, he told me, he says, nobody's negative on NVIDIA. And we heard them all day long today on here. We heard them all whack last week, bad-mouthing NVIDIA. And I'm going, where have you born in a barn? You got to be in the now. That's what makes you a good trader. You got to keep up on the news. If you're in a trade, you got to keep looking at that news. You never know what's going to happen, especially when you're at real high levels in the market. And we're so close to an election. Now, I wouldn't suggest anybody to hold anything right now until at least a couple of months. Because that's the way I'm going to be trading for the rest of the year, until the election. I ain't going to take too many risks. It's going to be day trading and scalping. I don't care. I do good enough day trading and scalping. In and out of one stock a day. That's all it takes to make, a good grand. My limit used to be $60 when I traded pennies, and I'd get lucky every once in a while and hit a 400 or 500%er, but I was walking away with $60 to $80 a trade, and people want me to go back to doing that again, and I don't want to do that. I want to make the big money.
Oh, looky. Yeah, I got the last one they had in the warehouse, so. I went right over there. Oh, I ran as fast as I could. Or it'd be a good place.
There, huh? Alrighty. Is there anything I got to do special?
Just hit power and cool.
Set it.
Set it high. And set at 69. So.
Yeah, well, that's too cool. Well, maybe not in here. Maybe 72.
72? Alright, hang on.
If it gets too cold, I just push that button up.
Yep.
Thank you very much, sir.
It's 79 in here right now, so
That's
hopefully
much better than the window unit. It's so easy and simple.
Yeah. Alright. You have a good day, sir.
Sorry about my sweaty hands.
Oh, you're fine. My hands get sweaty too.
Just putting on a little bit of this.
Oh yeah. All right. You have a good day, sir.
Thank you. I got me an air conditioner now. So that's a good deal. So I think what it's coming down to is being in the now. If you're in a trade, keep an eye on the news. You know, news can you know, like splits or any kind of bad news, and government jumps on you, the stock will dive. It's like that PDD today. I mean, the earnings were excellent. I mean, just beautiful. And it's a sister play to all these other ones that have dropped. Earnings were good. So this thing's going to go to 105, 108 eventually. And that's just a smidge of upsideness. Probably 100% gain. See, look at here. We're at 101 right now. This will be at $3. It was at $6.60 today before the knife. So my target's 105. Right here, you see this? That channel right there, this is called a yin yang. So I want to draw maybe that resistance right there first, and then this one at 105. And then if I gets wild and wants to run, 106. Turn down for what? So I'm listening to, I thought I was going to listen to CNBC there, but I was listening to, I blocked that idiot about when they were talking about NVIDIA. I thought they were making fun of this dude behind his back. And this guy's good at doing it. I mean, he'll get up there and, well, you called, CNBC will say, well, you called this last year or 6 months ago, we were going to have this big breakout to 350. Look, then they give you that look. What happened? I've seen them do it before, but they don't do it on themselves. Like when Josh Brown was calling out that triple top at the all-time high on Uber. I gotta make a post. Okay.
Okay, well, I'm going to get on out of here. Randy, how'd your day go? You still in here? Much better to clip the chin, not likely to break your head. Okay. Well, I'll be nice then. I'll break his jaw. I had mine broke. You ever notice why my mouth's kind of to the right? Kind of like a, who's that? Johnny Cash or had mine broke twice. My nose broke 3 times. My heart broke many. That's it. I got my nose broke 3 times, and my jaw broke 2 times before. But the biggest part of life is when my heart got broke much more. She come walking down the aisle, and a smile on my face. Before I knew it, she was walking out of my space. I love that woman, she got a real good heart. When she left, she just tore me apart. Thanks all. We'll see you tomorrow. And tomorrow, like I said, I'm not going to come in here shouting out calls first thing. We're going to wait for the setups. I mean, I like getting that beach trade in and scalp that couple $100 right off the bat. And so we'll just see how that goes tomorrow. We'll wait for the setup. Then everybody will have an equal chance. I'll be able to call it out ahead of time and say this is what we're looking for. Don't forget the 3 black crows.